What's good, fam? What a mission. What's going on, y'all? Oh, we're coming up to our expiration date for this move up. Market makers taking advantage of every last minute, apparently. How was y'all's afternoon? Good trades? We got to put in the week. We got to put in the weekly high before 12, meaning we can't put in another high between between Tuesday and Thursday. Because if they want to get their weekly inventory swing done, they've it's by timing, right? So you got your false move up that clears that liquidations, and you have 3 days to clear the liquidations to the downside. 1 day to set up the trap, and then you go right back into the swing again. So it's against market makers' motivations to keep that false move going more than midnight on Monday, which means whales are in control, and then we trade by momentum at that point. We could get an early midweek, yeah, because of the data. We got to watch out for that. In 2021? We did already, didn't we? Oh, you mean like right now and it's up? Yeah, 70's been my top. 70 is my upper limit on what I expect to see here. Remember, we broke the FOMO fear line at 70. Right? We've never retested that break, so this could just be a retest and a continuation. You can't give me any of the credit, Aki. Because if you're trading anything more than 10x, you're not listening to me. So it's not my credit. Just be careful. My advice is develop a little bit of a safer trading style. Okay. Just remember what it felt like to be at 50. What you're doing is unsustainable. Nice, Joner. Hell yeah. Enjoy it. Yeah, most people's hoodies should be arriving if they haven't already, except for anybody who bought yesterday, the day before. Nice. Hell yeah. Yeah, on the 5 minute, you got your flip already. On the 5 minute, scalpers would be tanning, catching a tan at the beach. Oh, you're gonna get good use of the hoodies then. Which one did you get, Johnny? You got the heavy one? I'm guessing if you're in Norway, you got the heavyweight one. Love that hoodie. Nice. Hell yeah. Super dope. When I finally find a decent supplier that can make patches and badges and shit, the varsity jacket I'm gonna drop is gonna be ridiculous. What's going on, Marky? Yeah, Aki, I'm glad it's doing well, but you're not at $50 no more, right? Which means that you're sitting at a substantial amount of money now that if you lose it, you're gonna feel that. So, in my opinion, is try to get a little bit less aggressive and start thinking more about capital preservation now that you got it. From this point forward, the rest is easy. You did the hard part already. You just have to be careful to start switching your mentality into wealth preservation. That you own. Oh, because it says property of Cypher School. Look, I'm not trying to claim ownership of y'all. Okay, these are just the way that college athletic. This is the way that college athletic uh team gear is sort of made. That's funny. I think there's a slippery slope for SPY and Nasdaq. I do think there's still an opportunity for them to shock the world and put in a new all-time high. But it's gonna depend a lot on what happens in this FOMC meeting. Like a lot. No, I'm not mad at it. I have an open short position as well that I've been building for like a month. But if FOMC, if he comes in dovish on FOMC, we're gonna get a reaction. Yeah, Japan's today too. I got a little deep dive on Japan that we're gonna do in a, actually we'll probably do it in a minute. Did last night. I just never got around to it. Let me post somebody's calls. Oh, I did post that already. Okay. Snipers, bonus chapter. Yeah. So. Do-do-do-do-do-do. Mm-mm-mm-mm-mm-mm. All right, my bad, y'all. Sunday's class is posted. All right, so Thursday's class is going to be our scalping class, chapter 9. We went through our snipers, we went through our surfers. Now we're going to lock down that scalping role. Oopsie. You're lucky this didn't go a little bit higher. Sunday, depending if we get through the entire scalping thing on Thursday. Sunday we go into pattern recognition. Yeah, Delta. That's why I say when you sit down and start trading, you got to start from the top down. Like if you guys notice, whenever somebody asks me to look at an alt, I automatically start at the daily and like work my way down, even if they're just looking for TA on the 5 minute. Let's take a little look at global liquidity. So this is really bad. I don't think you need to be an expert to see that none of this global liquidity has come back into Bitcoin, right? Since the 16th. Last time we were really looking at this, we were looking at these big drops here, right? We were trying to determine what we were going to do with our Bitcoin when we got to these drops. right? This is where we had the overlay with NQ and S&P and gold and silver. And I was saying that this rotation is going to go into first into legacy. And then as legacy tops out, we start to get that fear of the market on that side being over, we would see it start going into oil. I mean, well, gold and silver. Right. And so far, yeah, right, for the most part, it went into gold. I mean, it went into S&P, sorry. We had this retracement, right? As liquidity sort of retraced, we retraced, gold retraced, S&P retraced. And yeah, some money's come into Bitcoin. More money has gone into gold. Way more money has gone into legacy on this rotation. Now we're getting close to the bottom of the rotation. Right? You're on a bit of an uptick. The 18th, we're gonna have another downturn. If you notice one thing about Bitcoin, you don't throw this away when it stops following, right? It's never guaranteed to follow global liquidity. It only follows global liquidity when that liquidity goes into Bitcoin, right? Global liquidity lets you know if there's any money left for trades. Is there any active capital flushing through the system that can go into risk assets? It doesn't mean that it's going into yours, right? Doesn't mean it's going to go into Bitcoin just because there's an uptick, which is why we follow all the assets. If we turn that on, the, the, right? You can see that there's times where that global liquidity is going into ES, right? Going into gold. And then you're seeing times where it flips, right? Here, gold went down, Bitcoin and legacy took that money, right? They came in. Everything's cool. Bitcoin's blowing off, legacy's going up, everything's following global liquidity, right? Until this point here. Right? Came down on global liquidity, but global liquidity was going up this entire time while we were coming down, which means simply people were buying other shit. Gold is going down, Bitcoin's going down, ES is on a tear. We're all the way back in 14 here. I just want you to understand how these cycles work. Right? You go in and out of correlation as the world decides to invest in one or the other. So if we look at it right now, uptick on global liquidity, uptick on Bitcoin, uptick on gold, uptick on legacy until the 6th. Right? We got out of here on the 8th. There was a small drop in liquidity. This is the reason that we got out on the 9th, because we had our de-risk, because we had a hard drop down. Everything sort of went down at that time. The only difference is that Bitcoin didn't go back up and everything else did. Right? Bitcoin took its plunge first, then ES took its plunge, and then gold took its plunge. So pretty clear that money's not coming into gold or Bitcoin off of this push. Now, when we get here to the 8th of July, right, this is the next moment where we'll be able to test to see. But I don't know how I feel. It's not until October. Let me check the offset to make sure this is right. Yeah. But you can see in the correlation, we're still 60% correlated, right, with global liquidity. But look at the short time frames. In the current time frame, we're only 9% correlated. A good way to look at it is only 9% of global liquidity is coming into Bitcoin. On the weekly, we're negative 74% correlated, right? Because we dropped as global liquidity was going up. On the yearly, we're 74%, negative 74% correlated. This will change. When we're back here, we were at 80, 90% correlation. I wouldn't say it broke crypto. I would say 10-cent happened because crypto was already broken. It's a bear market, y'all. I hate to keep saying it and just like trivializing it, right? But it's a bear market. Every bear market, they're going to come up with new fancy ways to screw you. Yeah. In the last 2 weeks, we saw global liquidity go up and we saw legacy, gold, Bitcoin, and bonds go down. Right. So where did the money go? Well, we saw Dixie go up. Right. So people were sitting in hard cash. And then we saw the influx into the IPOs. Right. So this is just, you know how they say you're supposed to look at everybody you're trading against as one person. Right. The old heads used to say, look at every trader in the world as you're trading against one person and you try to figure out that one person's psychology for the day. Well, that one person was taking profit on everything he had profit on to be able to buy SpaceX. Just falling over themselves to buy Elon a new jet. The market goes in cycles, man. We get 3 years of a bull market where price, for the most part, in a risk adjusted fashion, moves up. And then we have 1 year that's like a pressure relief valve, right? That wipes all the leverage, wipes all the speculation, wipes all of the bullshit projects, right? Basically wipes everything off the charts. Which, by the way, we're 7 months through already. The people that just come into the realization that it's a bear market. We've been screaming this shit since late October, early November. Yeah, it's cyclical, right? It's based off of global liquidity. Bitcoin and crypto are the most sensitive to global liquidity, right? Meaning if the liquidity is not available, then it's really hard for for altcoins to go up. And even when the liquidity is available, if there's like geopolitical reasons or macroeconomic reasons that the money will flow into something else, then you go through your prolonged bear markets. It's different than legacy. In legacy, they consider a bear market 2 consecutive 20% quarters. 20% loss quarter over quarter, they consider it a bear market. For us, gang, that's a Thursday. You know, that's a bad week. But for them, it's definitely a bear market. So when you hear people in legacy talk about, oh, bear markets, you really, when you're talking about Bitcoin's 4-year cycle, you got to ignore them because they're talking about two different things. Yeah, they're trying to push this down right now. You can tell. I don't even have to look at the book. I can tell that they're trying to push this down. They're trying to step it down. Guys, remember we're up against the clock at least for the day, right? By the logic of the market maker cipher that we trade, he has until Monday. I mean, until 12 o'clock to give us right. The signal that market makers in control is if we start taking out these lows. I don't see anything that says he's not. Right. This has just been news based and then a sweep based off FOMO. I got an experiment for y'all. Go to your just so you get another opinion, right? Go to your Claude or go to your AI and ask them if the war coming to an end and the Strait of Hormuz opening up is bullish for Bitcoin. And then ask it, is it bullish for Bitcoin within the next 3 months? Those are two different answers. Yes, it's bullish. It's bullish for everything. Right? People not having to spend out or the future not looking so expensive because of some long drawn out war is going to be bullish for all risk assets. But the majority of our refineries have basically shut down. So even when the strait opens, it's going to be 2 to 3 months before the world's back to full capacity. And even if all of those tankers leave the strait right now, it'll take 2 to 3 months for them to get to their destinations. The bottom of our bear market is in 2 to 3 months, or 3 to 4 months. Let's go to Keo real quick. Yeah, but patterns don't have to play out completely. I think that falls short because of the psychological at 70 at 69. Yeah, they're being super aggressive here. Aggression. I don't see anybody trying to jump in and catch the party. I don't really see huge buy orders. Viking, what's good, bro? You have a good day? Pillaging and plundering? That's a sell wall that when price came down, right? When they got that move that broke, that's a sell wall that got placed above, right? They're trying to push price down. In my opinion, if we break these lows and take these lows out, that sell wall will move down these highs, and you'll see that sort of walk down price or attempt to walk down price. Was about 1,000 Bitcoin sitting there. Yeah, it's decent size. It's decent size for the volume profile that we have right now. I don't think it's a spoof, right? They've let it absorb. They've let price come into it. I think it's somebody defending a short. If you're shorting with 5K Bitcoin and you have an extra 1K Bitcoin to help build a wall to defend your short, right, then that's just operating budget. That's like the cost of defense. Must be nice though, right? Have 1,000 Bitcoin just as a defense. When we saw a little bit of bullish absorption at the bottom, but you see these numbers compared to, say, the other day when we first started dropping, when they were bottom blasting, these were like 80 Bitcoin, 70 Bitcoin, 50 Bitcoin. Not a whole lot of appetite. But everybody already sold their Bitcoin for freaking SpaceX. So, like, it's not like there's a lot of Bitcoin left to sell either. And I'll tell you what I would do. If I was a whale, I was looking to drop price, or I was looking to, sorry, not drop price. I was looking to pick up position, right, into like the bullish news or whatever. If that was the thesis I was running on, I would buy all this Bitcoin. Okay. Remember what these large walls, what they give you the opportunity to do. Without that large buy wall, let's say you wanted to buy 1,000 Bitcoin, right? You'd have to buy like 100. Like you have to set like an iceberg order, right? Buy 100, buy another 100, buy another 100, let it fill, you know. But if you could just buy all 1,000 Bitcoin all at once and not worry about slippage because you got a massive wall right there, 1,000% take advantage of that. Yeah, SpaceX is going. If as long as this thing keeps pumping and nothing else is gonna move, in my opinion. It's actually even worse. As long as this thing keeps pumping, it might actually continue to suck. I don't know. I'm in. I got some at 135, which is good. I mean, 135 isn't even on the chart. I got it pre-sale. but it wasn't a huge allocation, so I won't be retiring off of it. Let's just put it like that. And I get no points for hodling either because I'm trapped for 60 days. So I think it's overvalued. But to be fair, so are 90% of the stocks on legacy probably at this point. Not that it doesn't deserve that valuation eventually, right? But I think it's overvalued right now. Yeah, we'll see. Once we start taking out some of these lows, I'll be a little bit more comfortable saying that that false move is done. Bro, I'll give it to the S&P though. They didn't fold, bro. All the other indexes folded and changed their rules to accommodate SpaceX. S&P was like, nah, get your weight up. Yeah. You guys got to remember too, right? The way that IPOs work, right, it's an exit plan for the team that was there early. And not like in an evil way, right? That's the way it's supposed to happen. That's the way it's supposed to work. That's the whole point. I haven't seen huge sell off yet, right? Which means the team is still looking for a top. Yeah. There's going to be janitors and lunch ladies and yeah. My boy Chow is my boy Chow's an artist, right? And he was one of like the first ones that was doing commissions out of anybody I knew. He was in like he was older than us, like way older than us. Um, but he got commissioned to do Google headquarters, paint the inside, right? To do murals in the side of Google headquarters. And they offered him money, or I can't remember how much money it was, right? Or shares. And I know usually this is one of those stories where you're like, he took the money and he was stupid, he didn't take the shares, and he would have been a billionaire right now. Nah, he took the shares. He took the shares out of there. Took like maybe 5 or 6 years, I think, before they actually went public. Absolute genius. Some smart people in business, man. Unfortunately, you have to have money. And the reason I say it is because if you're gonna take the short term short on a business deal, meaning you're taking the shit end of the stick for a better outcome, that's an easier decision to make when you've got all your needs met already, right? Like some of these kids, they pull them right out of the projects, give them a 360 deal. Record company completely screws them for like 500K and they own them for the rest of their lives. But that 500K was impossible to say no to. even if you knew that the deal was shit, right? Versus like Nas did a video for Ring, took equity for Ring camera, took equity, and then I think quadrupled his stake. And this is before Ring went public. Or 50 with vitamin water. Right? That was another flat check that they were trying to cut. But he negotiated equity. It's about ownership, y'all. Straight up. There's so many stories like that, Al. So many stories like that. Mm-mm-mm. You heard about that you heard about that painting that Google Gemini, $250,000 painting that Google Gemini found in somebody's house? Mom had bought a painting at a thrift store. She said it had been in the house since she was a kid, and her mom had bought it. She just randomly took a picture of it and gave it to Gemini, and Gemini identified the artist, and it was like $250,000 just sold at Christie's for $250,000. Know what I'm doing tonight? Scanning all the shit in my house just in case. Yeah, bro. You get a little fancy China set that grandma might have left in the cupboards or something. You better get to scanning. That's the first thing I thought too. I was like, damn, you can set up an AI agent with rules, right? Give it a knowledge base, give it an art knowledge base, and then take your ass to the thrift store and just get to scanning, bro. Who knows? You know, I was sort of thinking of, I mean, there's something that already exists. I don't know if you know anybody that does Amazon fulfillment. Um, one of my homeboys, his brother, basically like buys things, sends them to Amazon, and Amazon sells them, right? He doesn't have to warehouse them. He just, but there's an app that Amazon uses where you go to the store and you scan shit, and then it automatically pops up and tells you how much it sells for on Amazon and how much you would make. And he just walks around the store all day and scans shit. And then if there's any deals, he buys them, sends them into Amazon, gets his money. But something like that, an app like that, but that would work more generally, right? Not just on Amazon, but yeah, it's the same sort of deal, I guess, in a way. Speaking of storage wars, that's one of my guilty pleasures. This guy Neville that I follow, it's more like sneaker reseller, whatever. He bought uh he bought this storage unit for $2,000. It was $2 or $3,000. Um, and then when he opened it, it was a employee that worked for Adidas, and they had filled the storage unit with brand new sample shit from for the World Cup and for 2027 that hadn't even released shit. Bunch of messy cleats and jerseys, just all unreleased shit. Basically, like $300,000 worth of merch that he bought for 3K. And then Adidas contacted him and made him a deal to buy back all the unreleased shit because they didn't want it getting out. So I think he made like 1.2. He made like 125K from Adidas, and then the stuff they didn't care about. Like they let him keep the. They basically just wanted back the World Cup stuff because obviously that's. But can you imagine you buy a storage locker, it's maybe a month away from World Cup time, and you got every World Cup jersey unreleased in all sizes. Like what massive come up. What I can't understand, right? And I wasn't able to nobody really explained through the whole thing is why was there an Amazon employee? I mean, why was there a Adidas employee storing shit in a storage locker instead of having, you know what I mean? It's almost like the dude was skimming or stealing or something, and then he couldn't pay the storage. Like, how does Adidas fail to pay the storage that they're using? For, it just didn't make sense. He said the reason he bought the storage locker because there was one label showing, it was a partial label, and it was for the parent company that Adidas is underneath or something like that. So he took the risk. First of all, I wouldn't have made a video. I would have had all of that shit sold off. Yeah, yeah, that's possible. But the not be the letting the storage lapse is the part that made no sense to me, right? Like it's Adidas. You can pay, you know what I mean? I'm pretty sure they've got the budget for you to keep the storage locker from going. But most of those storage war shows are bullshit, bro. I don't click on that shit anymore. I bought a drug dealer's locker for, and you're like, bro, stop. There's a rocking chair and an old sink in there. Really? That's interesting. Yeah, that part killed me. I was like, why is there so much shit in here? It's been how many days since launch? When we were talking about drift yesterday. That's drift. Drift is way more pronounced on legacy. What drift basically means is you got a successful sort of power move to the top, right? Um, so IPO launches, smart people wait for the retracement, right? They're not buying on launch to get, but you can't buy all at once because these are allocations that you're getting. So the volatility is up, but you get drift. I personally do not get to enjoy any of this until no, I mean I am, excuse me. I am for short term sort of plays, but the allocation that I got for 135 is physical. So there's a way through Backpack where you can buy the shares on chain and convert them as well. So even if you're trading on chain, but you want to hold, just want to hold the physical, then there's also a way to convert. Yeah, 6 months. It's basically getting an allocation through somebody who has an actual real allocation and is on a 60 days. So you're on a 60-day because they're on a 60-day. What y'all do on my phone? Hold on, I'll be right back. Gotta go find this. I'll be right back. All right, I'm back. So I'm putting together a little deep dive to get ready for Japan. We'll move into that in like half an hour. It's so hard to do a deep dive on Japan without going down rabbit hole. And then the obligatory Iran deal deep dive. Um, Give me a second, y'all. I'm just putting a couple things together. All right. Price settles down. We'll go into some content. There's like a small deep dive I want to do on the decisions that the UAE is making right now as far as OPEC goes. Then I think we need to cover Japan so that we know what to expect coming into these rate decisions. Honestly, my opinion hasn't changed. If they can convince people that they didn't double spend and they can be trusted, then it is going to recover and it's probably goodbye. Long term. Short term, I think everything goes down. Bro, one thing people aren't, and I guess I should probably do a deep. This is what I need to do a deep dive on. Even though I covered it a little bit, but um, the U.S. locking down Mythos and Fable for just U.S. residents and businesses is a crazy precedent set. And there will be some good investments coming out of that, but they'll probably be in foreign markets. If you're any country outside of the United States right now, you just got a massive wake up call that you can't afford to sit and just watch the US develop AI. Right? It's not a everybody gets to use it sort of thing, the way that it's sort of so for national security and for business, right? You would imagine that money starts to pour into open source projects, or to money starts to pour into the smaller foreign based LLMs as every country builds up, builds up their own just in case. That's an ugly volume profile. Yeah, I co-sign that. Is on brand. You got name recognition. I used to use Ask Jeeves too. I think it's probably the first one that I ever used. Damn, that was like, now that I think about it, right? Like, obviously they didn't have the AI, but that was the concept, that it'd just give you an answer instead of giving you a site to go make you look it up yourself. They might have just been early, bro. Visionaries. Guys, you don't have to catch type ones, right? Take some pressure off yourself and just lock into catching a type two short on Zec on a bigger time frame. Shit, I mean, you're pretty close to that. See what I'm saying? We know how to do this, yo. Figure it out. And then analyze price action once you get in, type two territory. Yeah, last time you didn't get a good. You're short last time in the same situation. You would have basically had to take the double top. But I mean, you did get a swing fail. It wasn't a horrible signal. But at this point, yeah, you're just looking for that lower high. But there's no need to rush it. Okay? Let the chart come to you. Look at how far you are from the 50 EMA. The 800, 200. I mean, you see them there. Right? Without doing any actual TA, just from what we've picked up in class, right? We know that Cyclo, Psych High, 200, daily, 50, 800, all viable targets. Doesn't mean they have to hit, right? But that's where we start to look for confluence. Then we also know that 50% of these vectors like to get taken. Do. That's already recovered. We'll do 50% of this vector. All right, so you just go building your percentages. Right? Those are the two main vectors. The 50% of this vector is already taken. So like if you did the same thing 3 hours ago, 4 hours ago, then you'd be targeting the level that we just hit right now. Then you want to look at your SRs and you want to look at your trends. Trend. SR flip. Right. And you want to put on your VPVR. And look at your levels. Right. My volume node. Volume node. My volume node. Volume node. Right. Then you go in. You got to pull your fib, obviously. Then you go in and you start looking for your levels of confluence. Right. Where are your clusters? Big area of interest here. Right between your 382, your 0.5, you've got an SR flip, you've got 3 high volume nodes, and 50% of that vector. Right. So it's not just one thing. Right. Some people just want to trade structure, right? And they're like, well, that's an SR flip. That's probably where it's coming down to. Yeah, it's true. But accuracy comes from confluence. Right? Golden pocket. Does golden pocket look crazy? Is there anything else here next to golden pocket except for just golden pocket? It's literally midair all by itself. Right? The whale fib has a higher chance of hitting, but all of the real confluence is here. And think about what confluence means, right? All confluence means is the difference between this range right here and say this range right here. Here you have orders from people who trade golden pocket. Cool, right? We know plenty of people trade golden pocket. Here you've got orders from people who trade support resistance, from people who trade mean reversion to the EMAs, from people who trade W patterns to the 3 to the 0.5, for people that trade high volume node retracement, right? So the number of people that are sitting there looking at this area saying, hey, this is a good area to put your money in, right? Way more people. That's what you want. Right? A good trade is one where people that trade 7 different strategies are all looking at it and getting go signals. Does that make sense? Now we come back up. We see, what did we hit on that? $382. So it's good enough for an M pattern. So we got that 382 hit. And that's it. No reason to panic. You know, you're interested in the short, you come, you look for structure. If the structure's there, you wait for it to play out. While you're waiting for it to play out, you build confidence and conviction through confluence. And then when it lines up, you just take it. I think it's just having the patience. I think like I remember when I first learned how to trade patterns. The second that I saw the pattern, I would like instantly react to it. Oh, that's a bearish pattern, I'm selling. Or that's a bullish pattern, I'm buying. Instead of letting it play out, you know what I mean? When we get into patterns in chapter 9, we're going to talk about what Bukowski's favorite pattern. Bukowski's favorite pattern is something that he calls a busted pattern, a broken pattern, right? Broken patterns, if you've noticed, whenever you have, like, let's say you have a M that invalidates or a W that invalidates, that broken pattern tends to have a bigger reaction, immediate reaction, than if the pattern played out correctly. The problem is that there's no percentage for broken patterns. But being patient lets you get in on the idea of a broken pattern instead of already being fully committed to a pattern that hasn't confirmed. I would need to see it come down a little bit more, but yeah, one more touch at the bottom. I don't like to cut off wicks. I mean, I don't like to cut off bodies. So that's about the best I could do, which isn't bad. But I meant the top. One more touch at the top would have given me a little bit more confidence in that. And then I guess you could cheat it. But if you find yourself doing this, you got to stop because it gets to the point where you're just trying to make it happen, you know? There's no real way to teach which one of these W's is correct. I mean, which one of these bull flags is correct, right? Depends on when you came into the pattern. If you'd been watching this the whole time, then you would be looking at this. because this is what you would have set up from that second high, right? Because you've been watching this pattern longer. If you just step to the screen right now, right, then you could do that. Now, it is okay to start with one, and when you get new data, adjust it, right? But you got to be honest with yourself. Nobody can teach you. Nobody can tell you when you're cheating. Like you know when you're cheating. Like in your heart of hearts, you know when you're moving a pattern that if you're doing it to try to make it fit, or if you're doing it because you really see it on the, you know what I mean? Nah, the weekly divergence is definitely there. We double bottomed. We have bullish divergence on the weekly. I mean, that's all. Those are all typically strong go signals. The idea of a relief rally off of 55 was never the question, right? Oh, my bad. I'm still looking at Zach. The idea of this relief rally to the top was never really the question. It was always the target, right? How high it would go, and if that was the bottom. But you know, remember when we broke the bear flag and we said, "Get ready when we get back to those lows, we double bottom." People will be screaming, "Bottom of the bear market again!" Like literally, not even on the same day, like clockwork. No, we were talking about Zach. We were looking. I just somebody asked me a question about Bitcoin, and I was still looking at the Zach chart. This should take us all the way through licks if it holds. Let me get the measurement from that one. A 100 EMA holding on Zach. You're right in the middle of a really big volume gap. This needs to hold. You see it trying to climb over that high volume node. In my opinion, that's the only hope that this has to pull away. Pitiful. Better, still pitiful. Hands of a drunk surgeon, but still a surgeon. My bad, y'all. Anybody that's new and thinks I'm crazy, whenever I draw an arrow, I'm shooting for a straight line. And the closer I get to it, the bigger the W. OCD be like, stopping volume candle off the 200. Nice volume. These are all decent go signals. This is not a long I would want to take personally, but it does meet the requirements. So apparently, Trump said they moved the blockade, the U.S. blockade. We believe it. Anybody in the region with a nice telephoto lens that can just look out the window and snap a pic for me real quick? I'm just trying to see something. $250 spike on Domino's. The one closest to Congress is District Pizza, 28%. Hmm. I'm sure it's just a site. Let me find another tracker. Bear with me for a second. Yeah, I'm trying to see something. Can't imagine this hotel's getting too much action lately. These mountains right here are the problem. If it wasn't for these mountains right here, we wouldn't even be offering Iran a peace deal. But nobody wants to send their kids into that shit. Why can't I drag? There we go. Come on. Top right here. Nah, I just want to show you what the battlefield looks like from their side. Look at that shit. Imagine your main arsenal is mortars and drones. And this is what you get to see from your perch. Just a gang of flatland for as far as the eye can see. The chances of you getting snuck up on, right? Or you not seeing an incoming attack. in enough time to move your launchers, and that's just one mountain range, right? It stretches all the way on the side of the strait. It's like if you wanted to build a country to fight out of, like this is what you would build, right? Rows and rows and rows of mountains that have nothing but flat land in between them. Right. So even if you take out one mountain range, you see the amount of kill zones where you're just exposed basically. Like, look at that. Okay, you cleared that mountain. Cool. Right, now they're just sitting here staring at you. And this doesn't do justice, but I'm pretty sure that's miles of flat.
Going on here?
Just gives you the opportunity to like rain down hell, you know? Which is why we've been so hesitant to put boots on the ground. Problem is the only way to clear those mountains is boots on the ground, but there's no way to do it without loss of life, which isn't something we got the appetite for. So, peace deal.
Oh, peace deal. Thought we were getting ready to attack.
Now, it's just sort of covering like why Iran's even being offered a peace deal. Like, yeah, of course, we want the strait opened up. But if it was easy to just go in there and level everything, then we would take back the strait by force. Problem is the only way to truly clean. Okay, so look at it like this. What did I do with that? Did I close it out? This isn't like, you know, Cypher war strategy 101 or anything. This is just like common sense stuff. Right. So this is their port, right? And this line right here, from here to here, is where they've got where the Iranians have their blockade, right? First of all, look at this terrain. How many times we've been staring at this chart or this chart? You hear me? We've been staring at this map the whole time, right? But how many of y'all knew that the whole strait is basically like in a canyon? Right. Got mountains to this side. And then, like we were talking about earlier, rows of mountains all the way to the interior. Right? Look at it like this. Am I on 3D? Because it should look better than that. Let me see satellite. Satellite. Nah, you can't see the topography. All right, so this whole mountain range right here, right? This entire thing is what we were just zoomed into. Let it pop up. Doesn't look like much, but these are massive, right? The important part is when you turn around and you look in the other direction. Look at that. This is desert, right? Flat land for as far as the eye can see. So you're talking about an entire country that's holding the high ground. If they wanted to, they could rearrange the whole face of that side. But in my opinion, that's not the game plan. But what I was saying, the reason I brought it back up was, why not just take the port, right? Come in, take the port, screw it. They're in the mountains, leave them there. Take the port, lock down these two cities, open up the port and go, well, you can't do that, right? Because you're surrounded and you're in artillery range. You're not in drone range or rocket. You're like in shelling range, which means the second that you touch down on this beach, it's just, and they can shell forever. Shells are cheap. So you can't do that. Can't do that without clearing. And you can't clear without at least 100K special forces, in my opinion, and 1,000,000 ground units. And you can't put together 1,000,000 ground units right now without a draft. And a draft does not win you. A draft does not win you the election. Right? A draft gets you replaced. So we're back to the original point, which was this is why they're even offered a peace deal, because it's unwinnable. It's unwinnable without sacrifices that Americans aren't willing to make, nor should they be, in my opinion. You know, it's not whatever, but I don't think we have the appetite to do what you have to do to actually win that war. They can come in with the jets, yeah, but it's the same like in Tora Bora. You remember the Shock and All Part 2 in Tora Bora where they literally dropped the mother of all bombs on that mountain, and they still had to fight through every single one of those caves for the next 2 years. They got like built-in bomb shelters, right? Like natural bomb shelters. And then what makes it even more difficult with Iran is the structure of their military. I believe it's 37 or 47 generals that don't answer to each other, that each have their own factions. The way that their military is set up is directly because of their prophecy and their eschatology that they believe end times brings the return of the Imam. Their eschatology teaches them that there's a fight between good and evil, and good wins the fight, and good fights to the end. So the way they set up their military was separated disc-adjoining generals. So if one faction is taken, they can't surrender for the others. That's why the whole idea of a ceasefire is funny, because okay, cool, you signed a ceasefire. Now who's gonna go out and tell these 47 generals? Because apparently they don't even have satellite communication thanks to us. Everything is jammed up. So who tells the 37th general that a ceasefire was signed? Everything is still clanging where we left it. Do 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 do. Mm-mm. All right, we got some deep dives coming. I'm gonna let you guys pick the. I'm gonna let you guys pick the order that we going. Right after I remake this slide, because I don't know what type of time. I don't know what type of time AI is on. Not AI on, but AI is on. But this is not the type of shit that we're trying to promote here. This is a family channel. The hell was that? Funniest part of the whole shit. Not that he's supposed to have a face, but look at his face. Look at his face. I got you, Bobby. Give me a second. I'll fix it. Highly inappropriate. Nah, it's too much, bro. Yeah, exactly. And then my prompt, remake this visual with a less penis like pendulum. You gotta be specific before I just spit another one out. Pause. Bro, you wanna I just went through the rest of it to see if there was anything wrong. It's the only slide that he has a face. Every other slide, there's no expression on that one. Nah, Claude thinks he's funny, bro. That's what it is. Got jokes today. All right. I hear you. All right, we're gonna start with we'll keep it on the chart because we've got at least some sort of price action. But we're gonna listen to I guess we'll do Japan first and then we'll go into UAE.
picture this. You have this this
Nah, you chill out for a second. Mm-mm-mm.
picture this. You have this this booming economy.
Yeah.
Explosive job growth. I mean, the kind of data that usually has champagne corks popping on Main Street.
Right. Absolutely.
And Wall Street's response, triggering a massive 4% stock market slide.
Just a total panic.
Yeah. Yeah, welcome to the funhouse mirror of modern macroeconomics, where good news is, well, it's treated as a systemic threat, and traditional logic is basically completely suspended right now.
It really is.
So to truly grasp the sheer scale of the storm brewing right now, I want to set a really specific scene for you. Imagine the virtual studio we are broadcasting from today for this deep dive.
Ooh, I like this.
Yeah, we are in full dark mode. It's a cinematic, incredibly moody environment. Behind us, like filling the entire backdrop, are these communist turning, dark, stormy skies set against just a pitch black background.
Very
Yo, what
dramatic.
type of time are you on right now?
Exactly. And standing right in the
Super
middle of this
dramatic.
dark financial storm is a single figure. It's this cute, white, claymation-style stick figure.
Okay, I can see it.
It has a completely round head, absolutely no facial features.
Oh, I gave
Just
him
a
the Bobby
generic,
video.
Pure
That's what
white, blank slate of
he's
a character
describing the Bobby
looking up at
video.
these towering dark clouds.
Well, that feedulous little claymation figure is, it's really the perfect visual anchor for our analysis today.
Right.
Because that is the generic institutional investor. That figure embodies trillions of dollars. Oh, hey, welcome. What's up?
What's going on, guys? It's Dbloc. That little figure you're talking about is our little brother Bobby, just so you know. We're tuned in. Cat got your tongue?
Dbloc, what an absolute honor to have the man himself tuning in to our deep dive.
Honors
Oh,
all
wow,
mine.
the legend. And Bobby, huh? I love it. Little brother Bobby is in for a rough day.
It's perfect. Bobby represents trillions in capital, just standing in the rain, completely overwhelmed about these macro forces.
Algorithms failing and everything. Poor Bobby doesn't stand a chance against what's coming in your report.
He really doesn't. He's trying to navigate a world that is entirely divorced from historical precedent.
And we're diving deep because your Cypher School intelligence report is what's guiding us through this storm.
It is a massive dossier. It completely shatters the conventional consensus on global liquidity in central banks.
We're reviewing this chronologically to see when the clouds really break over Bobby's featureless little head.
Dbloc, you've identified stress tests that are going to put Bobby through a total ringer.
Starting with that reality-bending Friday, the economy looked great, but the stock market just absolutely tanked.
The 4% Friday slide. Institutional risk models like Bobby's just couldn't process the heat.
Right. The jobs report was a beast. It beat expectations by nearly 300%.
But unemployment stayed sticky at 4.3. It's a critical friction point you highlighted, Dbloc.
So even with all those new jobs, the market it panicked.
Exactly. Think of Bobby looking at an engine running way too hot.
Right, you don't celebrate high RPMs if you know the cooling system is fundamentally broken.
And in this case, the broken cooling system is inflation. Bobby knows the engine is going to blow.
So the Fed acts as the mechanic who just cuts the fuel line to stop the heat.
Precisely. We are in a regime where good news is bad news for little brother Bobby.
It breaks every fundamental model he relies on to manage those billions of dollars.
It does. Corporate revenue doesn't matter if the cost of borrowing capital suddenly doubles.
Everything becomes subordinate to the cost of liquidity. That is a terrifying shift for any investor.
Which brings us to the CPI inflation data you've been watching so closely in the report.
It's expected to print higher year over year, right? That is a total nightmare for the central banks.
They're trapped. They have a hot labor market and stubborn inflation that refuses to return to target.
And as you pointed out, the Fed can't exactly print crude oil to fix supply chain issues.
They're using demand-side hammers to try and fix a supply-side problem. It just doesn't work.
It's like trying to put out a house fire by draining the entire town's water reservoir.
Exactly. Bobby gets hurt because his mortgage and credit card rates are the ones being hiked.
Meanwhile, the European Central Bank and the Bank of Canada are splitting up on their strategy.
Europe is hiking while Canada is pausing. It creates these violent capital whirlpools that trap Bobby.
Money chases the higher interest rates, and Bobby gets caught in the currency crossfire.
But the real systemic tsunami, Dbloc, is coming from the east next week.
The Bank to Japan. This is the one that could really wash Bobby away.
Decades of zero interest rates are ending. The global plumbing is about to back up.
So if Bobby borrowed yen to buy tech stocks, he is in massive, massive trouble.
Apocalyptic trouble. If the yen appreciates, his debt balloons instantly in US dollar terms.
And then the margin calls start coming in. Bobby doesn't have the cash to cover them.
He has to sell his US tech stocks immediately, regardless of the price.
That's the price agnostic selling you warned about. It's a total liquidity doom loop.
It makes a 4% slide look like a light drizzle for Bobby's portfolio.
And yet, the Fed is still projected to keep tightening the screws in December.
They are holding the line on demand destruction, despite all the chaos emanating from Tokyo.
But then there's that mounting political friction, that supply-side argument mentioned in the report.
The idea that massive economic success can actually kill inflation better than high interest rates.
It's a philosophical battle over whether to hit the brakes or slam on the gas.
Bobby is paralyzed. He doesn't know which way the policy pedal's going to go.
So he looks for a safe haven, and he finds SpaceX.
A $1.7 trillion debut valuation. It's a staggering number for a public launch.
It feels like the absolute top of the cycle. Usually that's where Bobby gets burned.
Unless the government steps in, the report mentions direct sovereign investment into private AI companies.
That changes the entire nature of risk. It's a taxpayer-funded moat around the tech sector.
It transforms a high-beta AI stock into the ultimate government-backed safe haven.
But then we have to talk about the moral hazard you identified, Dbloc.
If failure is no longer an option, Bobby and the VCs will take insane, unsustainable risks.
Heads they win big, tails the public bails them out for national security.
It's the end of true price discovery. The market stops being a market.
Bobby's no longer picking the best tech. He's just betting on the sovereign printing press.
It's a staggering paradigm shift to leave our featureless friend Bobby with.
Dbloc, thanks for the incredible map through this storm. We'll be watching Bobby very closely.
Keep your eyes on those yen carry trades and the December Fed meetings.
We'll see you next time to see if Bobby finds an umbrella or gets soaked.
Thanks for nothing, clankers. That was my fault. Instead of giving them, I gave them the report, but I gave them a Bobby video too, and I think it threw them off. It's all good because I got some something I want us to watch real quick. Not really worried too much about what Bitcoin's doing right now. We don't have too much time.
On Friday, domestic equity markets sustained a sudden 4% liquidation. The catalyst for this severe sell-off was a monthly labor report showing domestic job creation beating expectations by a factor of 3. This illustrates the current good news is bad news market environment, a condition where investors interpret underlying economic strength as an immediate threat. When the economy demonstrates robust health, financial institutions calculate a higher probability that the central bank will intervene and cool growth through restrictive interest rate hikes. To deconstruct the exact mechanics of this event, we are opening the Cypher School Intelligence Report. The report identifies a central banking system locked in a structural trap, where domestic equity volatility serves as a primary indicator. This trap forces an inflexible inflation model to collide with severe looming vulnerabilities in foreign currency markets. By tracing the origin of Friday's market drop, we expose the exact fragilities governing global monetary policy today. The Federal Reserve operates under a strict dual mandate. It is required to balance domestic price stability against maximum employment. Currently, these two metrics are emitting conflicting signals. The unemployment rate remains rigidly stagnant at 4.3%. Simultaneously, the Consumer Price Index, the primary metric for inflation, is actively tracking higher year-over-year expectations. When institutions see resilient labor data alongside rising consumer prices, they price in the inevitability of the Federal Reserve raising interest rates. This illustrates the immediate effect of those anticipated rate hikes. As borrowing costs increase, it restricts a consumer's capacity to finance purchases. Higher capital costs also throttle corporate expenditure. Businesses curtail expansion investments, which directly compresses future market valuations. Recognizing this chain of events, institutional investors do not wait for the actual policy change. They preemptively offload their risk assets. By liquidating early to avoid tighter financial conditions,
which is obviously what we saw over the last 2 weeks, right?
the market hardwires the paradox directly into its mechanics. Strong economic data triggers an immediate sell-off. The Federal Reserve attempts to manage these outcomes using interest rates, but it faces a severe mismatch between its available tools and current economic reality. The persistent inflation in the CPI data is no longer driven by outsized domestic consumer demand. Instead, the core inflationary pressures originate within the supply side of the global oil market. This diagram models the problem. Geopolitical instability artificially restricts the physical supply of crude oil. Raising interest rates destroys consumer demand, but cannot force physical oil to flow. The central bank's mechanism fails to transfer momentum to the stalled supply. Conversely, if the Federal Reserve lowers rates to ease business conditions, they risk cementing the baseline inflation rate even higher. This specific policy limitation is not isolated to the United States. It is a shared liability for central banks across the globe. The Federal Reserve is caught in a non-responsive loop. It is forced to apply demand-side punishments in an attempt to solve an unyielding supply-side problem. This domestic limitation is compounded by a growing divergence in how global central banks are deploying their monetary policy. While the Federal Reserve and the Bank of Canada are currently holding interest rates steady, the European Central Bank has begun transitioning to active rate hikes. The most critical deviation comes from the Bank of Japan, which recently broke years of historical precedent by raising interest rates 25 basis points. This specific policy shift exposes a massive systemic vulnerability within the foreign exchange market, known as the Japanese yen reverse carry trade. This network map outlines the carry trade. For years, institutions borrowed massive amounts of Japanese yen at near-zero interest rates to generate cheap capital. They injected that borrowed capital directly into risk assets worldwide, heavily inflating international stock market valuations. When the Bank of Japan raises interest rates, the value of the yen abruptly increases. This triggers an immediate crisis for global borrowers. The cost to repay their yen-denominated debts skyrockets, forcing them into severe margin calls. To cover these sudden liabilities, institutions must rapidly liquidate their global risk assets. The 4% domestic equity slide reflects a broader global contagion, fueled by forced international liquidations. Beyond foreign exchange contagion, Federal Reserve orthodoxy is increasingly colliding with domestic political mandates focused on economic growth. A prevailing political critique argues that aggressive interest rate hikes artificially stifle national economic success and business innovation. To align the central bank with a growth-first agenda, executive figures are exploring the use of political influence to reshape Federal Reserve leadership. This strategy relies on a specific counter-theory that lowering rates to build massive economic capacity will generate enough output to organically outpace and kill inflation. Validating a low-rate environment under current conditions requires exceptional private sector growth. Proponents point to specific market markers of this expected growth, including aggressive tech sector expansion and the expected public market debut of aerospace firms with valuations exceeding $1.7 trillion. There is also active exploration of directing United States sovereign investments into the artificial intelligence industry to act as an independent institutional backstop. This executive push to lower rates for capacity building stands in direct contradiction to the Federal Reserve's goal of demand destruction, creating severe policy friction. Domestic equity markets are currently trapped between three converging forces: robust labor data, foreign exchange contagion, and rigid supply chain realities. The central bank faces pressure from positive jobs data to maintain high interest rates, yet remains entirely powerless against the Middle Eastern oil constraints driving actual inflation. Simultaneously, the persistent threat of further Japanese rate hikes ensures that global liquidity could violently contract at any moment. Despite these immense fragilities, current market valuations are sustained by the promise of potential sovereign-level buying programs. The prospect of massive sovereign investments alters the core risk calculus, giving institutional investors the confidence to ignore macroeconomic warning signs. Until monetary policy tools are strictly matched to the actual geopolitical drivers of inflation, structural volatility will aggressively persist.
And the people that aren't expecting it will get chopped up really nasty. This is what I was talking about, Drift. Right? I don't fear a big drop. I fear a continuation for a week, 2 weeks that gets people complacent. Big drop's not a big deal. Big drop, everybody will get out. But it's all going to come down to the next couple hours and what we hear out of Japan. I've got one more PDF I want to share with y'all. Let me drop the script in here real quick. And then we'll move to OPEC.
I knew that Japan narrative was coming.
I mean, it's 7, 8 years in the making. But it's mostly because they've got their version of the FOMC coming up. I gotta check the calendar. The times always screw me up. The time difference always screws me up. And then we got Warsh. I wonder what the over under is on him coming out. Leverage. All right, the next piece is only 2 or 3 minutes long. See about how long it'll take for us to lose this support and start to squeeze.
Welcome to this intelligence report. Today we break down Operation Supercycle, an analysis of the macroeconomic master plan and the geopolitical forces currently impacting the bond market.
Hey, Supercycle bros, don't get excited. We're talking about commodities.
The upcoming Federal Reserve meeting is the focal point. While markets expect no rate changes, the real story lies in forward-looking rhetoric and recent shifts in gold, which historically signal significant volatility in the bond market. The master plan involves 4 key steps: cutting short-term rates, shrinking the balance sheet, deregulating banks through SLR exemptions, and using AI narratives to manage inflationary expectations. By making SLR exemptions permanent, the Fed essentially launders liquidity through commercial banks, allowing them to absorb bond sell-offs and keep the market functioning despite an officially shrinking balance sheet. The yield curve is our primary diagnostic tool. When the spread collapses, banks stop buying treasuries because the profit incentive vanishes, effectively stalling the financial engine. Geopolitical shocks, like the conflict near the Strait of Hormuz, are inherently inflationary. They spike oil prices and lock short-term interest rates high, sabotaging the Fed's ability to lower borrowing costs. The U.S. Strategic Petroleum Reserve is acting as an artificial shock absorber. With limited supplies remaining, any exhaustion of this resource could force inflation to rebound, pressuring the government's debt refinancing. In this shadow war, global actors have distinct goals. While the U.S. seeks stability to refinance debt, Iran aims to leverage inflation via oil supply, and China uses AI to challenge U.S. valuations. Looking ahead, we see two paths. A dovish signal could reboot the markets, while a hawkish reality could increase pressure on assets like gold, stocks, and crypto. Use this decryption key to interpret market indicators. Terms like transitory or movements in the DXY dollar index provide crucial clues about the Fed's underlying direction. We are currently witnessing a rotation of global capital from paper assets to hard assets. This supercycle shift is driven by deglobalization and record fiscal deficits, and it's likely still in its early stages. Our technical assessment remains neutral for now. We advise awaiting clear signals from the Fed, while maintaining a focus on hard assets as the primary long-term investment theme. This concludes our analysis. Stay patient and stay informed as this situation develops.
Let's just go through that real quick so we don't rush through it. So basically talking about Wash, right? When he comes in, still sitting at 97% chance that we leave things completely the same, right? That's what's been priced in. Anything aside from that, even if it's the smallest cut or raise, needs to be priced into the market. The last time that we were in this situation, like they said, was October, when we had the inversion of the yield curve. And well, October 2023 wasn't great. So what's the plan, right? For the Fed to get themselves out of this, there's 4 things they need to do, because the problem is the bond market, right? Nobody wants to buy U.S. debt. So they need to cut short-term rates, right? It lowers borrowing costs, delivers the administration their, midterm win. The problem is inflation. Right? How do you cut rates into inflation? Right. So for that, you need to start reducing the balance sheet or shrinking the balance sheet. Right. So now what the Fed is doing is the Fed is trying to incentivize people to hold long-term bonds. Right now, you're getting, I believe, over 5% for the 2-year. Why the hell would you hold it 30? Right. Everybody sold off the 30-year like crazy. The Fed for a while tried to buy back the 30-year to control the yield. Now they're moving into desperate territory where they're actually selling off the 30-year to increase the yield, to try to incentivize people to buy the 30, even if we have to pay 6 or 7%, which is nuts. Deregulating the banks, right? The SLR agreement lets them use bank money through reserve repo and other sort of instruments to do the first 2 steps, right? To help bring that bond into that bond yield into control. Now, the reason that they're pushing so hard on AI is a simple concept, right? There's a concept that you can either cut your rates to combat inflation, or you can innovate out of inflation, right? Innovations and growth to your GDP, right? This also brings down inflation. My fear is that we're going from a Fed that was trying to use rates to control inflation to a Fed that is going to step on the gas pedal as hard as we can. So think about it. There are 2 different approaches. On one side, we slow down. We hit the brakes. Even if it hurts the stock market, even if it hurts advancement, we slow down before things get out of control, right? On the other hand, we speed up. We speed up and we hope that the amount of money and the amount of innovation that's about to come in gives us a jump up ahead of the world that helps with our inflation, right? This is happening at the same time that the government's telling Anthropic that they can't give Fable or Mythos to anybody outside of the country. I know that doesn't sound like a big thing, but think about what that means for a second. Because everybody that I've talked to, and just my personal experience, but most of the people that can't use it now and aren't going to be able to use it in the future, their biggest complaint is that this last week with Fable and Mythos have been their most productive weeks. Right? They've literally taken existing businesses and increased them and improved them by, twofold. So now you're talking about only one country having access to that sort of, and it's not just going to be Anthropic. Unfortunately, I think we're setting a precedent where if you're a US AI company, you're not going to be able to provide your latest models to foreign nationals. Right? And a lot of that, in my opinion, goes to prop up AI in the hopes that it can handle the inflation problem we have, which in my opinion is dumb because we've already seen how the money's flowing into AI, right? We've seen that circular economy already, where NVIDIA is selling bonds to AI companies and AI companies are giving those bonds right back to NVIDIA to get chips. And then NVIDIA is using the money that they make from selling those chips to give more bonds to AI companies that in turn give it back to it's circular, right? So the idea of that being able to prop up and change some sort of cycle, in my opinion, is naive. We know Hormuz strategic petroleum reserve. The only reason that we haven't run out of oil yet, literally by math, the only reason we haven't run out of oil in the strategic reserve is because of the oil we took from Venezuela. So let that sink in for a minute, right? For anybody who hasn't already come to the conclusion that the only reason we went into Venezuela was because we were going into Iran, and we knew that the oil situation was going to be tight, and we couldn't do anything to affect that straight unless we locked down the oil that we needed. Right? So because of that, we're still pushing, but the fact that this is coming to an end, and the fact that we just looked at the map of Iran and the difficulties of actually having a kinetic war in Iran is why we're pushing so hard for the ceasefire right now. We need those tankers to start pushing through the strait again. We're cutting it close. Put it this way, we're not flat broke. Like, we're not in desperate situations when it comes to oil, but we can't afford another war. And as a country, you can't be in that situation, right? So that needs to be replenished, which means that those tankers need to start moving. And then when it comes to the debt market specifically, right, there's three different goals that each one of these actors has. Ours is optics. Right, we're trying to project stability. We're trying to keep all of the deals that we have in place, all the protection deals, and we're trying to keep up the narrative that Iran's losing, so that we can keep stock market pumping. Iran, on the other hand, doesn't really need a military victory. All they need is to survive. Right, we need a win. They just need to be left alive at the end of the saw. Right, so the plan is to keep Hormuz choked long enough for inflation to spike, interest rates to explode, the petrodollar to go to shit, sovereign debt market to fracture. Right, the sovereign debt market fractured because of the petrodollar, because of the fact that Hormuz was shut down, right, and the petrodollar deals that we had with suppliers weren't ensuring them free transit. Then they had to sell off bonds. The only reason they were holding bonds was to transact in dollars. But if they're having to buy and sell their oil in yuan, then that's what fractures the debt market. Right. And for China, it's all about valuation. Right. They're trying to catch up with America when it comes to AI. DeepSeek's the closest thing they got. They've got Manus, I think, is probably a little bit closer. But the point is to bring an end to the stock market, right? Stock market's too strong. China's trying to crash our stock market. China's been in a Cold War with us. Y'all know how I feel about that since before COVID. So all of these are just passive aggressive Cold War attacks. So what happens when the Fed comes in, right? If we get a dovish signal, then the market feels like, okay, there's a cut coming. Even if we don't have a cut now, there's a cut coming. Liquidity is incoming. And we start to price that in. If it's hawkish, then it's a problem. Right? Because we've basically already priced in no cut. But if the idea of a rate hike starts to get any louder, that needs to be priced in. And that's something we haven't done yet. So we'll be listening and watching the speech closely, right? For keywords, transitory, right? Lets you know it's dovish. They expect it to just go away, basically. Stress in the treasury market. If he starts talking about bonds, if he starts talking about treasuries, then you know that they're making the excuse to start the QE, to really start leaning in. Dixie drops, the market's pricing in the money printer coming on. Right? Dixie drops, good for assets. Dixie strengthens, the market's pricing in higher for longer. That'll be our sign. So we're currently experiencing that super cycle that takes us from paper heavy to physical heavy. Right? In the past, probably most people's investment lifetime, I know for my investment lifetime, because we went around the last time that gold and silver and commodities were really the thing, right? So our past is financial assets like stocks, bonds, paper that's meant to resemble something physical or represent something physical. We're now moving into hard assets, right? What we call deliverables. Right? People with money going into the second half of the 500-year empire cycle aren't interested in IOUs and promises, right? They're interested in deliverables. What can I buy that I can get delivered? I can buy gold, I can hold it. I can buy silver, I can hold it. I can buy Bitcoin, I can self-custody it. Right? Commodities, real things. Driven by deglobalization, which we're seeing. Right? Everybody's splitting back up into their corners. We just went through a whole globalization phase. And that globalization, deglobalization is going to end up being a cycle just like everything else. So we're currently 6 years into the midlife of that 30-year commodity cycle, which is about 15 to 20 years. Right? 3 years ago, when I said, we're going into a metal super cycle, it wasn't because of the cycle per se, right? It was because of the setup that we had. But the cycle has a lot to do with it, because without being in that 15 to 20-year window, you just run flat, right? Ask anybody that's been hoarding silver for the past 20 years. Right? These are those crazy guys that are like, just buy silver and bury it. After we top out on commodities, it'll be another 15 to 20 years before this happens again. Right? The reason I'm talking about it, I know this is a crypto channel, but these are the type of swings that you either take advantage of them when they cycle, or you wait a decade before they come back around, you know? I'm not screaming go run into commodities because, be honest with you, you're not early, right? I've been in gold since Putin invaded. I've been in silver since October. No, before that, August. But energy is big, right? So I'm still in copper. I'm still looking at copper. I think as long as you understand what's getting the attention right now, the good thing for us is that Bitcoin is included in those hard assets, right? The world is seeing Bitcoin as something that you can self custody and hold and can't be taken from you. Apparently, speaking of taken from you, apparently Iran's getting their stable coins back, or they're getting their stable coins unfrozen as part of the peace deal. All right. We got one more thing to listen to, and then that will be the end of the daily deep dive. Yeah, I don't think gold and silver are done. I've been telling y'all for the longest when equities finally top, then I think that it goes one last run into gold and silver. If I could tell you that, brother. I think at the most Legacy has one more ATH, if that, and that's only if things get super bullish. The problem is that what you're seeing right now is that SpaceX is just taking all of it. The amount of money that's going into SpaceX right now, we would have already seen those all-time highs, I think. But what you're seeing is twofold, right? You're seeing, this is the NASDAQ. And then each one of these companies in the NASDAQ has a specific weighting. Okay, so like Nvidia might be like 13%, and then Amazon, whatever. So there's specific weightings or how much of the company is in the fund, right? Which means the ETFs also have the same structure, right? Because all the ETF does is buy all of those companies at the same weighting that's in the NASDAQ so that you have the same exposure, right? So that means same shit over here. Different weightings, some bigger, some smaller. When you drop SpaceX in here, you have a problem, right? Because what used to be like a 14 or 15% weighting for Nvidia now has to go to like a 10%, right? And maybe Amazon's needs to go from like a 7% weighting to a 4% weighting because they've got to make room for SpaceX. And making room from 15 to 10 means a fund selling off 5% of their Nvidia, right? And buying SpaceX to fill that place in the fund. So you're seeing a situation where you can have SpaceX doing that and then everything else beating it until everybody gets the proper exposure. I know it's a lot, but type of shit you got to pay attention to. This thing's continuing to pump though. What does this put us market cap wise? 2.5 something? SPX. $2.5 trillion, 2.7 trillion, something like that. Jesus, bro. Like, come on, gang. Somebody please. Okay, what's the what's the expectation? Right? Let's say this guy that just bought right now, unless he's filling a fund, but just for regular retail buyers, okay, it's pumping, right? But like you're at 2.5. So like let's say you want to double your money, you're looking to get to 400 or 300, which puts us close to like a 4 trillion market cap. So sketch. I say this holding shares that I can't sell, but I'm also not top blasting this. For me, it's good. The higher it goes, that means the deeper it can retrace and stay the furthest away from my entry. So it works for me, but I just worry about people that are fumbling in. There's only 4% of the supply available. And he already said that he 1000% plans on selling shares to raise money. He said it in the filing. So that means those sales are coming. Super interesting shit, though. I'm not gonna lie. And their number is way smaller than your number. I promise you that. All right, I'm gonna let y'all chill before I go on to the next deep dive. I'm not trying to burn anybody out. Get a drink. I'll be right back. What's going on, family? I got a lot done in those 3 hours. I feel you there. I spent the 3 hours before that waiting now. They gave it a good effort, but that 50 ended up being too much for the Bulls. 200 EMAs at 65.5, measured moves at 65.3. Psychological ranges is my target. Remember, I told you guys on Saturday when they came in that these ranges get revisited during the week. Right? That's mean reversion. Once we hit midnight tonight, we'll be on our 3-day down. We invalidate our 3-day down by taking out local highs. Anybody that's been here for a while knows how this works. Well, on paper, yeah, like on paper, the value of his company went up by more than he's made in his entire life. It was at $2.8 trillion the last time I checked. And it was still pumping. It might have hit 3 trillion. He made more money than all of us have made in our entire lives. Screw Buffett. And I mean all of us, anybody in earshot of this live stream, either now or in the future. It counts for you too. If you hear this 4 months later, I'm talking about you as well. Listen, there's always somebody in front, man. That's what we were talking about the other day, right? Like, there's always going to be somebody way in the lead, uncatchable. Crazy thing is, he's just getting started. Right? When you look at all the things that we were talking about, his real plans for Tesla and SpaceX, he's about to get another double, triple up in our lifetime. We're at our last level of support here. Under control. Hmm. It was at 203 on NASDAQ. Crazy ass move. Let's see, what is the measured move been here? Because I don't think we've hit that. Yeah. Close, but not yet. It's the measured move from this bear flag. I don't like it from there. It's too much of a dip and break of structure for me. Different people might look at it differently. You know, it still brings us down to the bottom of the range. Some confluence on target. It's not bad. And then this was that pattern. I'm just catching up on whatever news I missed today. What I just try to make sure that it's not that there aren't too many breaks of structure, right? Like, in other words, if you go on a higher time frame, right, you can excuse that vertical. Like if you go on a bigger, like you go on like the 15, you can like excuse that vertical, right? But for me, a big dip like that, a big break in structure like that, I can't continue. If that wick wasn't there, then I would have taken probably the entire thing. But like if you look at the 10-minute, right? Like this is all one move. But this, right, that took out the lows, or that created the low that got taken out. That's how I sort of mark it. And again, it's a bit subjective, right? The only difference is if somebody takes the entire shit, where was I? If somebody takes that entire move and then it falls short, right? I'd rather take it conservatively. I used to always take the longest. Right. The Knicks just won. There's no way in hell I'm about to say something that flagrant. Let me reword this. Um, I used to be in the habit of pulling the measured move for the biggest possible distance between pole and flag. Jesus, that was hard. And then you just mess it up at the end. Pause. Um, but you get what I'm saying. I've learned to be more conservative. Hold on, my net's tripping right now. Let me see what's going on. We good? What are you doing, internet? Okay. It was a fight, bro. It was a fight the entire way through. Compared to what was about to be said originally, I did great. But yeah, basically, you want it to be one consecutive move. Right? Like, I want it to be one consecutive move, and this breaks that consecutive move for me. I'll even take a run flat, right? Like, a run flat is fine, but when you start to break structure, come back, put in lower highs, right? You're starting to be an M pattern more than just a straight drop. Then it's hard to justify pulling that entire move. What you could do is for a while pull both, right? And then you'll see what I mean. Like over time, but so that you don't feel like you're missing out. You can pull a conservative and then a liberal sort of measure move. And then you look like that. But you'll see what I mean. More times than not, if there's a break, it tends not to play all the way out. When the hype runs out, bro. Problem is we're still in week one. They still got their index listing coming up. Now you have performance, which means that there's FOMO. So let me go on chain. Yeah, it depends. I mean, if you get a nice retracement here, clear some of these vectors, and then the market opens with a dip to buy. Yeah, I thought that was effective. Come down, clear these vectors, touch the 50, daily open at about 200. I mean, that's where physical is. Right, remember this is paper basically. Physical is underneath 200. Oh, that's the 15-minute. Yeah, there's a massive premium here. Where's the 50? The 5, 1, 3. Trying to find similar structure. Yeah. I think they both end up somewhere around 200. When did it, let me see when the divergence happened. Why am I SPCX? Dot P. I mean, it didn't really. It's literally just the. It's literally just a difference in premium. Yeah. Price action is matching 1-for-1. A couple times where you double it. Yeah, I was looking through that now. I gotta dig in through all the paperwork and the press conference and all that. I mean, it's important, but it's not. Every time there's a FOMC over there, the yen carry trade's gonna unwind. Right? Like that's the FUD that we got. But it is important because if things don't get any better, that day will come. I honestly wish it would. The last thing we need is making it through this entire bear market just to have the yen carry trade unwind in September or November. Even worse, right? After we bottomed. So either do it now or get your shit together so we don't have to worry about it later. Yeah. They're gonna rate. They're gonna raise rates by 0.25, in my opinion. I would. That's what I would do. If they don't, then that means that they are really our bitch, for lack of a better term. And I mean that in a non-sexist euphemism, sort of. No, I mean like they're our bitch. Like they're gonna do whatever we say. It shouldn't be. Discord. You guys hear me?
Yeah, I got you.
All right, cool.
I was going to ask you something about the bigger macro bear channel. Have we broke out of that?
Oh yeah. Broke and retested the bottom of it.
As above, so below.
Let me see. This one right here. Broke. Technically took out the lows. And now we're going through some mean reversion. Also coming to the end of this liquidity drain on GLI, but we still have. When does he speak? On the 17th? Just did the report earlier and I can't remember. It's on the 17th. Anyway, somewhere around here we get our Fed, our new Fed. And then we do have a rise in global liquidity. But again, I don't think that comes to us. I don't. There's a couple ways this could play out. This could be the top on legacy here. And then this could be metals, or this could be the top on legacy here, and this could be metals. Either way, we're crawling our way down our first big drop. Remember, we talked about this when we were looking at liquidity, when we went through the whole thing. We said this is the biggest drop that we have since we've been playing, right? Since even bigger. This is the one that dropped this on the 9th, but this is, this was substantial. Wasn't to be taken lightly. And we started dropping even before, really, right? We started dropping on this top. Right? Everything was all good when we were following. First hit. The whole time that went down, we went down as it found bottom. The war was on, right? We reacted a little heavy to this. When it came into ES and NASDAQ here, then came back into Bitcoin here for the war push. And then went back into ES and NASDAQ. We bled out. So definitely not coming to us. If you look at the correlation, right? Only 8%, negative 80% for the week. So could it turn around? Maybe. But we'll know when it gets to the 26th, right? When we get to the 26th and this says 100% correlation, then we know where the money's going. But until then, the trend is your friend. Yeah, that's the thing, right? When we're not following global liquidity exactly, the problem with it is we still tend to follow it when it drops. The only question is, does the money come back into it? Does the money come in when global liquidity goes up? But even when we're off correlation, we tend to drop, which is kind of disrespectful, right? You don't pump with global liquidity, but then you want to go ahead and follow like on the downside. Go ahead. Nah, nobody on YouTube was talking before. I mean, nobody on Discord was talking before either. I was just yapping. 800 EMA psychological ranges. Order something.
You have an open mic, Dbloc.
All right. Give me a second, y'all. I'm just wrapping a couple things up, and then I'll come kick it for a while. All right, I'm back, y'all. All the day's work done. Everything checked off the list. W day. What are y'all up to? All right, what do we miss here? Three-day down. All right, let's see. Let's see the messages. All right, I'm back, market maker. Let's get some action. Let's do a UK session. Yeah, our invalidation is closing a candle above 67 too. So then we look for lower prices. But I'm not gonna make it through this summer. I just spent entirely way too much money on a massive portable AC for the office. But it's so bad the central air isn't even keeping the office cool. The rest of the house is fine. I needed something ASAP. I'll probably look for a more permanent solution in the future. The way I judge it is if I can't wear a hoodie, it's not cold enough. Nah, I've already got everything set up. The problem is the portable AC that I already had one in there, but it was a single hose. So it was creating a vacuum, and I got that 3090 in here with that i9. So you're talking about 1,000 watt space heater running 24/7, 6 monitors. That shit creates a lot of heat. Yeah, that's why I got the dual hose. The one that I got brings the air from outside. Although it is Miami, it's not like that outside air is any cooler. But you know what I mean. Yeah. Coming back down to earth. It's only gonna get worse, bro. It's only gonna get worse. It's gonna be a hot one. That's good though. That's good money for you. I went overkill. I went extreme overkill. This shit should be enough to drop the temperature in a 1,000 square foot room.
Can we go back to 59 now?
Um, sure, if you get enough people to agree. We're gonna need some gas money, but I'll drive.
Yeah.
Father's Day is on Sunday, right? You guys excited? It's about time for a new pack of socks and a tie. hmm I did my dad nasty on Father's Day, bro. I got my dad Armor All cleaning kit for his car from Discount Auto Parts. They say Father's Day and Mother's Day are a little different. To be fair, I was like 11, but it's better than a tie. It's just something you could use. Yep. No, no, not my labor. Nah, like here, knock yourself out. The single hose is fine as long as you can exhaust the room. All right. DM's answered. Nothing left to do. What do you got trading right now? Hype is moving, you said? Quick little train? No, I can't touch that. What am I supposed to do with that? You're right, I won't. You're absolutely correct. Nice little play, though. This is not what I pressed. Mm, 7%. That shit would have to come back and give me a nice type 2 for me to even think about it. Yeah, this thing's already broken out. I mean, GG's if you're in the trade, but this is not a setup. It's basically the same measured move, give or take. Depends on where you want to pull it. From the range, top of the range. He shorted it from 9 to 32. Something about that math isn't mathing. And where did I put? Oh, seeds. It's an uncomfortable amount of short liquidations above, though. I personally would like a more definitive end pattern to drop from here. I want a big, chunky, bearish pattern that retail can't help but recognize. Be honest, we already got that 382 hit. So technically that end pattern's already there. But I'll show you what I would do if I was a market maker. If I was market maker, I'd come up, swing, grab this liquidity. There's plenty of space to move up without invalidating my weekly swing, so I'm not worried about that. What I would like is a more aggressive drop. So going up to get liquidations, giving whales a pile of money that they can sell into. Grabbing all those licks and taking this last vector just to clean up the chart. That's what I would do. And then that makes the market wake up to big chunky M. Again, not needed. It could go anywhere between 0.5 and golden pocket. We already hit 382. So that M pattern's already established, even if we drop down now. But something that shifts sentiment. Unless you guys just like price crawling. Like I kind of like when price moves. Mm-mm-mm. Let me pull that M pattern since it's already valid. I'll just leave it dotted. That would give us that psych low hit we've been looking for. Invalidation obviously is right where we're at. Right, volume has to pick up here. Yeah, maybe I'm just greedy, but that's what I would do. Volume on type 1, volume on type 2. I can't just sit here and wait for this to play out. Let's go lower time frames. See this sort of microstructure we have. .5 hit confluence with this with the SR flip. Showing some weakness. Give me a second, yo. I'm here. My glaucoma was acting up. Which vector, Scout? That's your neckline. Let me make sure all of this shit is just on the 15-second. I need to start being a little bit more use my tools. Because you can set these to where they only show up on certain time frames. It's just annoying and shit to do. The one at the end of the target. Neither one of these two vectors here, and honestly, not even this one, has to be recovered. I mean, there's still imbalances there, right? So there is money made for recovering. But after they clear their 50%, right? 50% of that vector. I mean, I guess you could say there's a percentage of that that didn't get taken. This is sort of the same deal, right? They've already taken more than 50% of this vector. This looks like they took exactly 50% of the vector. Just about. But yeah, no real specific reason except for I personally, if I was market maker, wouldn't want to call it that close to my invalidation. If you start to go up too high, this starts to look less like an M pattern and more like a homo-inducing breakout, which is, I would imagine, what I would be trying to avoid at this point, right? If I was trying to take my 3-day retracement. But remember, the point of the 3-day retracement is to grab liquidity. So that move up still does that. You could move up, grab liquidity, not invalidate, and then move down and grab the liquidity underneath. That'd be perfect. I mean, it gives you a tight stop loss. As long as you don't worry about stopping out. But for me, it needs more than a bullish pattern for me to take a trade. Right? Is there a possibility of going up and sweeping? Yeah. Do I see a setup that I love? Nah, not really. But for somebody already in a trade, right? It's a whole different story. Well, the only things it has going for it besides structure is that it found buyers on its main drops. It found buyers. Yeah, well, there's 5 ways to enter. Well, there's 4 ways to enter. The 5th way, we don't really do that around here. But you either catch that snipe or a type 2 entry on a higher low, or you're a breakout trader that plays the breakout, or you're a confirmation trader that waits for the retest after the breakout, or you're a tarant that FOMOs into the tops. But for every pattern that you see, these are your groups of traders that trade the pattern. And so like I said, the trade that you're in, especially if you get in on a snipe or something, but your trade starts to build confidence when you notice that every group has had their entry, right? Because then it's like a force multiplier. You don't want to be the only one in the trade. Best trades are the ones that you buy, and then another trigger hits for somebody else, and it goes up because they buy, and then another trigger hits for somebody else, and it goes up because they buy. Another trigger hits, Participation is what we look for. I personally favor 1, 2, and 4. But that's just personality thing. Level 5, yep. Level 5 is who type 1, type 2, type 3, and type 4 get to sell our bags to. If we're lucky. Those are the cryptos a scam. Every time I buy, price goes down. Market makers watching me, being hunted. That's those people. I don't know what my agents are doing, but they're popping up all types of side screens. Today was a good newsroom day, by the way. If you haven't checked the newsroom for your daily research, I would give it a skim. Oh, struggling with that 50. Like going once. It's like 2.5. Like 2 3/4. Give me a second. I'll be right back. Light that uptrend. Or that downtrend, I should say. Go, go, go.
Slack in there a little bit, D, with your indicator off.
What happened?
I said slack in there a little bit with your indicator off.
What do you mean? Which one? Oh,
The one that you
I'm
made.
running it on the side right now. I'm fixing something.
Oh, I see.
Yeah, it just depends on your stop loss, bro. Just depends on your stop loss and your sizing.
This is where I put my alert to come get and sit down on the computer. This is kind of a crazy deciding point place right here. I was happy to log in and see your white lines pointing up, though.
Yeah, small time frame stuff. I still think we're on our 3-day down. I just think there's enough room to grab some liquidity and not invalidate. A bit of a little win-win. But I wouldn't be surprised at all to see this roll over and just go. We waited patiently until Monday at 12, didn't put in another high yet, so we gotta go with the swing. What I was looking for was just something really short term to get into. Mostly out of boredom.
Isn't there like a ETF or something launching tomorrow or something? I can't.
I don't know. You'd have
Yeah,
to be there.
BlackRock. I like a BlackRock ETF. I can't. Ah, Hoover, yes. Tell us about it.
I mean, they've already got their spot. They've already got their spot ETFs, which are the important ones.
Dude, I watched one 4-year cycle break Instagram video, and now I can't stop them.
That's funny.
I have to like right click, not interested.
It for me, it's frustrating because there's a part of the bear market where it turns from this is a super cycle to the 4-year cycle's broken, right? And that's an important sentiment shift because as long as people are still thinking super cycle, super cycle, super cycle, right? Then every move up is that move that But then they sort of
Yeah.
they loosen it and they go to, well, the 4-year cycle's broken. Okay, it's not a super cycle, but we're not gonna go down for the whole year, or we're not gonna go down as far as we usually go, or
What do
whatever.
the kids call that? Hoping.
Yeah, it's a little copium. They're trying to compete with MicroStrategy, basically. Targeting 25% yield a year. Good luck. Yeah, it's basically a copy of the STRC.
I mean, what would that scenario be like? Would you have to have a lot of Bitcoin for it to even be like noticeable in your bank account each month?
Percentage is percentage, right? I mean, this is meant for money that's put away for yield or for money that you don't think can outperform that. You got to remember, they're targeting legacy. You hit 25% a year and you're like, cool. What was I sleeping? You know, did I pass out for 7 months or, but when you're used to,
Yeah.
when you're used to 10%, 15% on a bang out year in legacy, God, 15%, you absolutely killed it. Then 25% starts to look like, you know, when the only other thing you've ever sat your money in is government bonds for 5. It's Bitcoin accumulation. It's the same reason that Michael Saylor's doing it. That's a Bitcoin accumulation strategy. He's letting you in on his. So institutions get institutional capital. That institutional capital comes with institutional rates. BlackRock can get the same rates that Michael Saylor can get. All of these Bitcoin treasury companies that are trying to get up to the size that'll allow them to be included in the fund is so that they can get that institutional inflow of money, right? They want those institutional loans. Once you're inside, the reason that they get those is because they understand that once you're in an index, you've got passive cash flow, right? Every 2 weeks, American paychecks come in and fill the coffers. So they offer you better deals. That's how Michael Saylor can get 1% interest on a 5-year loan or an asset that gives you 70% year over year risk adjusted and runs on a 4-year schedule. Like that's the best deal in finance right now if you can get it. And that's what all these Bitcoin treasury companies are fighting for. I don't know if anybody was here. I'm sure some of you were here, although there's not a lot of people here right now. But when the Bitcoin treasury companies started popping off, I said, if the top 7, if the mag 7, right, if they don't become Bitcoin treasury companies, they'll be replaced by Bitcoin treasury companies at one point, given enough time. But seeing how things have played out, I mean, I think 20 to 35% of the mag 7 are Bitcoin holders right now. That's going to keep going up year over year because you have to compete. If you got Bitcoin on the books and the new laws now mean that you can actually count the appreciation of Bitcoin on the books as earnings, then you almost have to hold Bitcoin. It's like companies that hold real estate. They're not real estate companies. They hold real estate because their competitors hold real estate. You need something besides your business model to bring in funds.
So when you leverage your Bitcoin holdings, what is considered a value? The USDT value or the amount of Bitcoin you have? So let's say it goes down a lot and you're leveraged against that, like maybe you got a loan or you created some sort of other asset from it or whatever, or you're starting a new company. Do they look at the amount of Bitcoin or what it's worth?
They look at the value. So
Right.
the only thing that can, well, then think about the deal that he has though, right? The only thing that could kill him is if a bear market lasted for more than 5 years. Right? Because the way that the cycle runs, yes, there's going to be a year where that margin is going to get low. But it's at the end of a 3-year push where you've already made back multiples of what you have to pay back. And then the interest on your, excuse me, What happens is when the Bitcoin goes up, you also have to pay less because the value of your margin is increasing. And then you just watch the health, right? It gives you like a little health meter, red, green, yellow, and you want to keep it like in the yellow, you know. Starts to get in the red, then you gotta see what you're doing. The goal is to do that with a percentage, right? This, in my opinion, and this is my opinion, this opens up for you when you get to around 10 Bitcoin. The point is to be able to collateralize maybe 20%, 10% would be great. That would be the absolute goal. If you could collateralize 10% of your Bitcoin without having to take profits, right, and use that money to both be able to live for the year and to be able to compound. Excuse me.
Is it true he had to sell some of it recently?
He sold some. I don't know how true it is that he had to, but if you go to, where is it? Give me a second. He sold 35 Bitcoin. He also bought 1,700 Bitcoin the following week.
So, and it was probably Bitcoin that he bought at like 15,000. Like, he doesn't take a loss, right? He sells
You're
like
not
his
taking a
earlier
loss. You're just
coins.
loosening up. I mean, this is equity, right? So like, you have to use your purchasing power. I want my CEO to take advantage of the fact that he has access to that capital. I would love if he started actually playing the market with us. You know what I mean? Dump a nice chunk of that bag at the top of the bear market. Let's get it. Let's really get
Do
the
you
party
find
going
him?
around here, you know?
Do you find him truthful in what he
Yeah,
says and what?
I think he believes. I don't think he's intellectually dishonest. That's the one thing I can tell you about Michael Saylor. I think he believes every word of what he says. Now, whether that's healthy,
So,
whether he's delusional, that's another, you know what I mean?
yeah, that's another story. But
That's
do
another story.
you think that it's um that he oh, this is a hard one to ask because I don't even know if I'm asking it right. That he has someone on the side that manages a Bitcoin trading fund or trading account?
Well, he stepped down from the head position to focus on the Bitcoin side of it. So I do think that he's the final word. So here's the article. One of the summaries that I covered on the articles that I was looking at, where Michael Saylor said that Bitcoin was necessary. The sale of Bitcoin is necessary for Strategy's digital credit business. Michael Saylor said MicroStrategy is selling some Bitcoin to fund their digital credit business. Before you panic sell, understand what's happening. This isn't Saylor dumping the convention in Bitcoin. He's using Bitcoin as capital to build a new business product. MicroStrategy is basically treating the new Bitcoin holdings as a war chest for expansion. It's strategic, not desperate, blah, 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 blah. Bigger picture is Michael Saylor still has massive Bitcoin holdings. So what he's trying to do is keep the yields on his products healthy. Every once in a while, that means that he's got to sell some Bitcoin off. Because think about what happens, right? You keep the yield on the product healthy, costs you 35 Bitcoin. 10,000 other people see the healthy yield and buy your product. The next week, you get to buy 1,700 Bitcoin.
Yeah, no, that's
You
cool.
can
I
do
mean,
that shit all day long, you know?
yeah, he's playing the banking game. He's playing
Yeah.
games. He's got to play the game.
Why not? You're leaving money on the table. I've always said that. Like, bro, give me 4 years at MicroStrategy and watch what I do to that coin count.
I know it's not the same as dividends with stocks, but there's something to be said of not selling like the dividends like on Microsoft, man. It's so fun because I don't rely on it, but it's so fun when it comes in, man.
Yeah.
Because I'm even holding during like I'll hold when it's like not crashing, but doing a 20% drop. But it's still nice to have those dividends. I don't think a lot of people understand how beautiful that is
Yeah.
for something like that to come in just randomly, you know? It's not random, but you know what I mean, quarterly or whatever.
Yeah. And the compound nature of that shit too. If you're young,
Dude, I take it and I put it right back into the stock and buy more stock. It's
it's
stupid, I
what
know,
Buffett
but
did. I mean, that's what Buffett did. You compounded for, you know, and when you see the curve, like when you see how parabolic that compound curve goes, because it really sucks in the beginning and it doesn't feel like you're doing a lot. You know, it's like, oh, I got 15%, I put 15% back in, you know, but it starts to like, it runs flat for a long time. And then it starts to sort of pick up. And then it's just,
yeah, I meant it's stupid from somebody who's trying to get quick returns, like a
yeah,
crypto trader, like a trader, like not a holder or somebody who's
yeah.
in the long game, but like for the long term, yes. Like
You got to do something with
I
your
always just
profits, you know, like making the money isn't the end of the game. And that's what I think like a lot of new crypto people don't understand. Like, okay, you come in, you made the bag now, you hit big, you got $2 million cash, 40 years left to live, you know,
yeah.
like 40 years left to live, which means you got 40 years to protect that $2 million now. And then that's when the game starts, right? That's when you're like, okay, this is my make money, and this is my sit and collect dividend money. This is my sit and collect yield money, right? This is my hard asset money. And you start to become a little bit more paranoid about, okay, like the bag is getting too big for it all to be in one place. I'm kind of
I mean, I
crazy.
would.
I keep a lot of my net worth in one. Like I play the rotation game heavy. So like
I mean, dude,
I switch
most of mine's
rotations,
in
right? But
silver.
I don't have everything. I'm diversified over a period of time, right? Over the year, I'm highly diversified. Right? I move where the action is. But at any one snapshot period of time, I just don't. I don't. If I can understand the cycle and I can see the cycle, I don't see why I should sit in an asset that's off cycle. Like I understand shit happens and all that, but I'm young enough to take the chance. I'll start worrying about that shit, you know, later on in life. But you're still young enough to
Well,
take
dude,
risks and you've got the skills to sort of make calculated, you know what I mean, decisions. Excuse
I
me.
mean, I'm biased because I have an employee discount. I get 10%. So
Oh. Oh
whenever,
yeah.
so you know what I'm saying? So I get, and this is not new. A lot of companies do this. I mean, this is not special, and I'm not special because of this, but I'm trying to say the reason why I'm so heavy Microsoft is because all of my rewards I get every year for performance are unvested shares, right?
Yeah.
And then they vest every quarter, and they vest at whatever the amount is
Well,
or what the value is at the current time, right?
that's a completely that makes all of those things make something a good or a bad investment, right? Microsoft is a way
Yeah.
better investment for you than your normal person. Not that it's a bad investment for your normal
Yes.
person, but it's a way better investment for you.
But to stack on top of that, then they have ESPP, which is the employee stock purchase program, on top of your rewards. So that is that you take post-tax money from your paycheck and you purchase stock at 10% discount. So if you are at the bottom of the bear market and you're buying stock really low, and then you get an extra 10% from the low,
Yeah.
right? And so when it goes crazy and bull market is back on again, you're just riding it right up and down. And all these tech stocks have been doing this since COVID, man. They've been going crazy up and then dump and crazy up and then dump. And it's just been fun. I don't even know how to explain it. It's like I'm not worried about it. There are times when I wish I would dump at the right time, but it's just keeps compounding and compounding, and not having to watch it and babysit it actually feels comfortable.
No, I feel you. Good morning, H.
I'm too distracted to trade crypto and trade legacy at the same time, man. I gotta pick my battles.
Yeah, and there's no I mean, there's no real reason to, right? Like
I just can't believe SpaceX is still going not straight up, but pretty damn close to it, man. It's just I thought it would just dump on everybody by now, but I don't know.
morning,
Maybe they're
Shadow.
waiting.
Look at this though. Hold on.
That's just crazy, man.
But now, hold on. Remember earlier I told you that paper and physical would catch up. For right now, we've got a big, we've got a pretty decent premium. Right,
Yeah, that's
your
fun.
physical SpaceX is going for under 200. Now it's catching up. Like I expect this to break down, and I expect somewhere this week for us to be trading at parity.
Wonder how much money people are making in between the gaps, though. That's just nuts, dude.
Yeah. And remember, this is aftermarket. Right? This is where the market closed. This is what the
228.
paper market did after the physical market sold. So we had a premium of 228 to 199. Now it's settling, right? But
Almost at 30%. No, that's not 30%.
Legacy didn't get any of
15%.
that. That's just straight degen action on chain. No, I think when the team finally sells, it's going to be more dramatic. But you know, I hate these. I hate this pattern. That looks really bad on the 5-minute. We'll see how we open tomorrow, but It's all going to come down to if we close this premium now. Hold on, can I do this? Give me a second. I don't even know if this is possible. I think it is though. All right, so that's basically aftermarket activity. Now, my question is, well, it wouldn't, but since they're traded on chain and it's just a derivative, right? Then it wouldn't gap up because the asset itself never traded for 228. Right, the derivative did. But the reason that price needs to settle on the derivative side is because SpaceX options open tomorrow too, right? If I'm not mistaken. You can't make promises to settle SpaceX at a price that it hasn't reached on physical yet. Right? That's a good way to get wrecked. Yeah.
And knowing that, that's tradable.
Yeah. You trade the correction, right? You trade the, especially once options are live. That's basically what we do on option settlements, right? When options settle, we're trading towards max pain.
So in a weird way, that's kind of like a CME gap. I mean, I know it's, yeah.
Mm-hmm. Now the market can stay rational, the saying, for longer than you can stay solvent. And we've seen divergences between paper and physical get out of control. I mean, with silver, right? It was weeks it was weeks where paper silver was selling at 70 and you couldn't buy an ounce of silver for less than 150 in real life. And then JP Morgan pulled a quick one, dumped silver, got themselves out of those positions. Because JP Morgan was on the hook to settle trades at a price that silver wasn't at for an amount that they didn't have. They were on the hook for 4.2 tons of silver. This right here so this drop on silver is what got him out of that trade. Scot-free. When silver, I'm sorry, I'm lying to you. It's this one. right? They were on the hook to buy 4 tons of silver at $123. Because remember, you can't settle paper without physical, right? They need the physical to settle the paper. And then price magically drops down to $69 where they're able to settle at the price that they were at the prices they were offering. Must be nice. Have friends in high places.
Dude, it's so disingenuous when people say Elon's coming after your 401k.
They all are.
Well, I
It's
mean, they
the
can't go after
entire
your
stock market.
401k. I know, but if the fund that you have in your 401k or funds that you have in your, if you're not buying a fund with those in them, then you really, it's like you say, you control your algorithm. You control, unless you got a really dumb fund manager.
Well, you'd have
Like you
to
don't
leave
have to
you'd have to leave the
participate.
Nasdaq. Like that's the issue. The issue is them being ushered into all the major indexes. So it's like you have to buy the entire pie or you just avoid the index completely. You know what I mean?
Yeah, I mean, there's like standard value index funds that don't buy any U.S. stocks at all,
Yeah, but most
and
people in a
like,
safe, most people on a safe or moderate portfolio through their 401k are just dumping money into S&P and Nasdaq. And they were pretty successful this year, right? 401ks are looking nice and chunky.
no, dude, don't. I feel it's toppy, so that's why I turned all my stuff to standard value indexes because I'm
Yeah.
not writing this down. I'm not writing it down, dude.
Yep. I mean, I think that's all it is, man. I think people just look at their 401ks as passive investments, and I get it because it's long term. Um, but if you're not going to actively manage it, then you just have to be mad at every company that IPOs or that gets accepted into the index. Now, I understand why people are upset because it's obvious. I think it's so obvious this time that even if you're not into this type of shit, you're like, wait a minute, you know, like you're doing this at the highs, and the dollar
Yeah,
amount is
that's
so
my point.
big. Like the dollar
They're
amount is so
selling
big,
into us.
the 3 trillion or the that we hit, whatever, that's so massive that you have to start doing the math. You're like, okay, wait a minute, could they have launched a $3 trillion company at any other time when 401k levels weren't at this level? You, not that you couldn't, of course you could, but would you? No. I mean, you're gonna sell into buyers, right? When everybody's cash rich, that's when you make your offering. I think what people are
And
upset about, aside from the ones that are just because there's a, you take a little bit of, I try to be well balanced. Like when I covered what I think Elon's plans are and all that, right? Like I was very clear to say, I don't know if his goals are benign or, malignant. I don't know if he's got bad intentions. I do know that what he's doing is going to make it possible for him to do whatever he wants. Now, that whatever he wants, that's up to y'all to figure out, bro. I'm not trying to get into the mind of a billionaire. Like, I'm sorry, a trillionaire. Disrespectful. I'm sorry, Elon. I got to get used to
dick
the T word.
bastard.
I got to get used to the T word, bro.
Yeah, that's a little. It's a little. I mean, in a weird. I know you're gonna think this is kind of petty, but I've said this my whole life. Like a dollar doesn't take you places it did when you were a kid. And so, not taking away from his accomplishments, because obviously what he's done, he's jumped into domains that nobody else. thought that there was a place to make money. So let's just say that. But it just feels devalued. Trillion does not feel like it was like in the early 2000s. You know, if you would have been a trillionaire then, that would have been ridiculously crazy. It just
a
seems
trillion.
like it doesn't.
I honestly, in my opinion, and it's happened to me too. In my opinion, crypto is what makes us feel like that. We throw the word billions and trillions around in here like if it doesn't mean anything. $1 trillion is an amazing accomplishment. Like, that's a lot of money, bro. A lot of money. Like, look, where's my little AI thing that I put together for this? Hold on.
But didn't we talk about this, about like inflation, like what it really is if the money wasn't inflated?
Yeah, so like so instead of $1 trillion, it would be, 800 billion. But my point is that we're so
that's still impressive. Yeah.
That's insane, bro. This is more money than anybody should ever. Like, I think we've lost concept of what $1 billion is. Like, $1 billion is just like, to people's eyes, just like a lot of millions.
But you can't blame I say Americans, but I say Americans because you can't blame us for thinking that way when our government spends it like freaking drunk sailors. You know what I'm saying? Like, they don't respect the money. I know you're all about respect your money. Why should we respect value or respect numbers when they don't respect the numbers?
Look, $1 billion in dollar bills stacked is 68 miles high. $1 billion in dollar bills stacked takes you to the edge of the atmosphere where the air thins out. $1 trillion takes you past the moon. It's a ridiculous amount of money. Like, an absolutely ridiculous amount of money. And then the 12.25 trillion that we've already that have been pulled out across all assets. That's the liquidity suck that we've had since they announced the IPOs. Across equities, across Bitcoin, Bitcoin doesn't even count. It's like a splash in the bucket. But across gold itself lost over $1 trillion, almost 2, I think. So this is the amount of money that's been sucked out for this IPO. Over 3 times the distance. Approximately 830,000 miles. Well, it's not stolen, really. It's just he's giving a world somewhere to put their profits at a stupid high valuation. That's not a good deal, right? But the hype is so big.
Dude, if you're a crypto trader out in the woods, let's say you're an awesome crypto trader, like you're the best of the best, but you're forced to move out in the woods. Wouldn't you think that Starlink still would allow you to make awesome money because now you have a way to connect to the internet? I mean, there's still value there. It's not like anybody.
It's not that there's not value, but it's being sold.
Provides value.
It's being sold, and it's being wrapped up with toxic assets. Is the problem, right? Nobody wants to buy XAI, right? But they're being forced to buy XAI. Excuse me. Because it's wrapped up. Right, SpaceX also took in Twitter. So you've got 2 companies that have been bleeding money that on their own you're not running to throw money at, right? But you're forced to sort of. And then when you look at what the money's being planned to be, I think people think when they're buying SpaceX that they're buying into space exploration. That he's going to use these money for Falcon 9 rockets. That's not what's happening. This money is going to be used to buy data centers, to get the fleet going when they absorb, because they're going to absorb Tesla. Heard it here first. But I promise you, at some point in the future, and probably the near future, in my opinion, they're going to absorb Tesla. That gives consolidated control over the entire X sphere, which is what Elon's always wanted, right? With 85% voting rates. When SpaceX absorbs Tesla, the voting, the shares that you get, the Class B shares that you get on SpaceX, come with hardly no voting rights. The Class A shares have 10x the voting rights of the Class B shares. So basically, you're being forcefully migrated into SpaceX, and your voting rights are being taken away. Or at least what you were used to in Tesla. And that's because Tesla shareholders have been dragging Elon through court for the past 3 years, bro. Listen, I'm the richest man in the world, and now I'm by far, right on paper, the richest man in the world. Then my next step is to get rid of all third party liability. Anybody that could stand in the way of me doing what I want to do.
Mick, what is it? Mix O'Longs? Mick O'Long, sorry if I'm butchering your name. I'm like looking at the screen from a distance. Dude, there's a lot of companies that are doing that, man. He doesn't have a monopoly on paying people under inflation rates.
No, I
My
think he's
company's
talking
doing that.
in general. That's just most, yeah, that's the system, bro. Unfortunately, the rich can only get richer if it gets tighter at the end.
Money to be made in the lagging indicators, right? That's why, like, these refineries, and well, I don't know if the refineries do, but somebody makes a lot of money off these huge oil swings, right?
Of course. Oh yeah. Actually, that's a good segue. We should get into this OPEC thing now that
Can
we're
I
here and
ask
it's
you
substantially early. Yeah.
one question about, you said it's about timing. They're going to force people to buy the top, and everybody's going to get dumped on their 401k. Something else I noticed too, I got this message from my Fidelity email alert system that said you're eligible to buy SpaceX IPO. And then I looked in the details, and it said being changed from $500,000 in your account to, because I have a couple of accounts, so I'm not going to tell you how much my account is, but I have one that's definitely less than 500,000. They said it lowered it to 2,000 for a minimum.
Hmm.
And then, because I didn't know what that meant, I went and searched it.
Hmm.
And do you think that that's a mechanism for them to suck more people in?
Yeah,
So,
definitely.
see what I'm saying? It's like it's orchestrated to get people to come in.
Yeah. They need to exit.
Yeah.
Just exit liquidity.
Yeah,
But
so
that's what going
I
public
just
is, right? Transferring that company from private hands to public hands. But it's always an exit plan for the private, for the employees that were there early.
But I didn't know I was supposed to be upset at this. So when I searched it, I also searched it on YouTube, and there's people covering this. They're like, now Fidelity's in on it. They're like, people are getting like upset. They're like, look, see, now they're in alignment with Fidelity, and Fidelity just lowered it for people who don't, and I'm just like, oh my God, I didn't know that it was all like planned like this. I don't know. I
Well,
just,
the
when you're,
banks are
yeah,
struggling to keep the banks are really struggling right now to keep their business model. We still don't know exactly what's going to happen with the Clarity Act. There's all types of, DeFi, there's no putting DeFi back in the bag, right? So once people get used to being comfortable with stables, and the banks are now going to do the job of bringing adoption to people who don't trade crypto, right? They're going to put them on rails. Even if they don't give them stables, they're one step away. Even if they don't give them yield, they're one step away from finding somebody that will.
dude,
So
it
yeah,
just
the banks
reminds
are
me of
getting greedy, bro. The banks are trying to circle the wagons.
it just reminds me of like a guy at a corner who's at like a homeless corner, and he's flashing fentanyl on the street. I don't know. It just seems slimy to me. I'm sorry. I'm a capitalist free open market guy, whatever, but that just seems slimy to me. Sorry, I didn't want us to go too far off the reservation because we were talking about timing and everything and getting dumped on. So, so continue on. Sorry, thanks.
No, you couldn't. Let me see. Let's do but yeah, let's do this real quick. Because I do want to cover what's going on with UAE and OPEC. So basically the TLDR, right? If you were in Cypher school and we covered the 500-year cycle and we talked about this Iranian war being a war on the petrodollar and the effect that it would have on the UAE and the surrounding countries, and then having to choose between the United States and we covered all that. Our part of that bargain was to protect oil infrastructure, to keep the dollar stable, right? To never use our power or our influence over the dollar to punish or reward, right? Which is very important that a world reserve currency do. And to defend naval travel, right? To be able to defend the transportation through the seas and provide safe travel from point A to point B. So Iran's number one job was to disturb all that, right? How do we convince these countries that they're not getting their part of the deal? Not only that, but make it cost them, right? So what we're seeing now, flash forward, why I want to show this is the UAE did not renew their contract with us. And in my opinion, I think that they're making a play to leave OPEC. So OPEC has controlled the price of oil for ever, right? By how much they hold, how much they pump out of the ground, and how much they hold. And they put themselves on limits, right? Which means they don't pump as much oil out of the ground as they possibly can. The problem is they see the end coming for oil, right? We're moving into an economy that in 20 to 30 years, the demand for oil isn't going to be what it is now. And the problem is if they stay in OPEC, that leaves trillions of dollars of oil in the ground that they never get to take advantage of. So they already turned back on their deal with us, and now they're looking around like, well, why should we even be part of OPEC? Because part of their deal with us was they help us control oil prices in OPEC. They were basically our representative in OPEC. So if they leave and they start pumping more oil out of the ground than they're supposed to, what happens to oil prices? Right? And how long does it take for the other countries in OPEC to realize, wait, they're kind of right. We're leaving all this oil in the ground. We're leaving money on the table. We're going to ramp up. So I see a future where all these countries go independent, right, out of the cartel and just start flooding the market with oil as cheap as they possibly can until, like I said, the demand for oil just runs out. Because what's the difference? Who cares if I'm selling a barrel of oil over $100 if I'm going to, I'd rather sell it for 50 and get all of the oil out of the ground. You make way more money than, you know what I mean? It's just like,
yep.
And it's not technology that's keeping them from doing it. There's definitely the technology there to pump everything they possibly can. And while the United States technically pulls more oil out of the ground, the reserves are what's important, right? How much oil can you make available to market? And that's sort of what we'll cover here. It's going to be quick. It's not going to be long, but I do want to get through it because this week is probably going to be really big. I expect to hear sort of official announcements of them turning their back on them.
All right. I'll shut my pie hole.
We recently
You might have seen this last night. I'm not sure if I played this or if I played the other one.
We recently gained access to a highly classified intelligence dossier compiled by Dbloc.
That's me.
The core finding of this report details a specific geopolitical move: The United Arab Emirates is preparing to exit OPEC, the Organization of Petroleum Exporting Countries. On paper, this presents a paradox. The UAE is not the world's largest oil producer, yet this single administrative decision has the mathematical potential to destabilize the global energy sector. Understanding why a mid-tier producer holds this much leverage requires a look at the underlying mechanics of how oil is actually traded. By nature, the raw oil market is structurally chaotic. When independent producers extract resources without coordinating, the system swings wildly out of balance. This chart illustrates the immediate market consequence. If too many producers flood the market with oil at the same time, the excess supply instantly crushes the price baseline. Conversely, if production restricts, even slightly, that artificial scarcity forces the price to violently spike upward. This establishes a foundational rule of commodity economics. Prolonged, predictable profit requires engineered market stability. The history of global energy power is essentially a series of evolving systems built specifically to suppress this natural volatility. The first successful attempt to engineer this stability began in the late 1800s with John D. Rockefeller. He built Standard Oil, a corporate entity that eventually controlled roughly 90% of all oil refining and pipeline infrastructure in the United States. This chart demonstrates exactly how Rockefeller achieved that monopoly, utilizing a specific tactic known as predatory pricing. Standard Oil would drop their retail price in a specific region far below their actual cost of operation, taking a deliberate financial loss. Local, uncoordinated competitors were unable to survive the artificial price drop and were forced into bankruptcy. Once the region was cleared of competition, Standard Oil would hike the prices back up, operating inside a stabilized, tightly controlled environment. This corporate model dominated until 1911, when the Supreme Court utilized the Sherman Antitrust Act to break Standard Oil into smaller fragments. Rockefeller established a working model for market stability, but government intervention proved that singular corporate dominance was politically unsustainable. Following the breakup, from the 1920s through the 1950s, the power vacuum was filled by the descendants of Standard Oil, a handful of Western energy giants known as the Seven Sisters. Companies like Exxon, Chevron, and BP operated as an oligopoly, collectively coordinating global production, shipping, and pricing. But this created a strict geographic tension. Sovereign nations, primarily in the Middle East, owned the land where the oil sat, while these foreign corporations dictated the infrastructure and the final price. Producing nations were paid flat royalties for the crude extracted from their soil, possessing absolutely zero agency over what their primary national resource was actually worth on the open market. Economic independence required sovereign control over the actual mechanisms of supply, shifting power from the landowner to the market mover. In 1960, producers met in Baghdad, Iraq, to execute that exact takeover, forming the Organization of Petroleum Exporting Countries, or OPEC. The cartel was established by 5 founding nations: Saudi Arabia, Iran, Iraq, Kuwait, and Venezuela. Nationalization became their primary operational tool, as member nations systematically transferred foreign-owned assets into state-run entities like Saudi Aramco.
By the way, this was the largest IPO in history before SpaceX. Saudi Aramco was the last time that they dropped a massive IPO like this. The only difference is that this was Saudi Aramco was the most profitable company on the planet at the time. A little bit different, but it's an interesting side note.
State ministers now managed global market dominance, coordinating sovereign exports from the halls of government. To enforce this stability, OPEC developed the quota system. Each member nation is assigned an exact production target, ensuring the market is never accidentally flooded or starved. By coordinating supply as a bloc, OPEC achieved what Standard Oil had attempted a century earlier, placing the architecture of control in the hands of sovereign governments. By 1973, the true capability of this cartel structure became visible to the rest of the world. During the Yom Kippur War, Arab oil producers executed an embargo, intentionally cutting exports to nations backing Israel. This coordinated restriction triggered massive energy shortages across the West and caused global oil prices to instantly explode. When you examine this structure, A comparative table shows exactly how the modern sovereign cartel evolved.
That was 1970s, by the way. The last time that we were in a war with Iran and there was a problem with the Strait and supply, and our interest rates needed to be cut but couldn't because inflation was high. And that's when Volcker, which was Powell's mentor, raised rates by 22%. 22%, not 0.22, at 22% overnight. Saved the country. But talk about a gangster move. He was under the same pressure that Powell was under, the same political pressure. Can't do that now, though. We did a whole deep dive on that back in the day, if you guys were here for it. But again, just side note.
Compared to the old corporate monopoly. Where Rockefeller used pricing manipulation for economic profit, OPEC demonstrated that a sovereign cartel can deploy supply as a geopolitical weapon. This cartel structure remains a potent instrument of geopolitical leverage. This context reveals why the findings in Dbloc's intelligence report represent such a significant threat. Looking at the modern global energy landscape, we can map out exactly where the volume is distributed today. This chart ranks top global producers. Outside of OPEC, the United States leads at 13.7 million barrels per day, with Russia pumping 10 million. Inside the cartel, Saudi Arabia matches Russia just short of 10 million, followed by Iraq at 4.3 million. Down the ranking sits the United Arab Emirates, producing 2.3 million barrels per day. Strictly based on daily volume, the UAE appears too small to disrupt a global market dominated by the US and Saudi Arabia. But raw production volume is not the metric that governs oil markets. The true leverage comes down to a variable known as spare capacity. Spare capacity is a nation's physical ability to rapidly surge or aggressively cut their oil production on demand. This visual shows Saudi Arabia's hidden reservoir. At any given moment, they wield roughly 2 to 3 million barrels per day of spare capacity. Because they can dial this output up or down instantly, they act as the market's swing producer. If there is a supply shock anywhere on Earth, Saudi Arabia uses this reserve to manually dictate cartel pricing. While the UAE maintains low daily output, the nation holds a hidden lever, 1 million barrels per day of spare capacity. For context, the total spare capacity of the entire planet fluctuates between just 3 and 6 million barrels. The UAE singularly controls a massive percentage of the world's total emergency supply. Control over global markets is dictated by the legal and physical capability to unleash supply tomorrow, regardless of today's pumping volume. Re-engaging Dbloc's intelligence report, the UAE's desire to exit OPEC is a direct move toward rejecting the cartel's quota constraints. If they leave the cartel, the quota system no longer binds them. The UAE can unilaterally unleash their 1 million barrels of spare capacity directly onto the market without coordination. An uncoordinated influx of 1 million barrels radically lowers the burden of a tight global supply, causing prices to fall. By acting independently, the UAE effectively neutralizes the primary tool Saudi Arabia uses for market enforcement. If the UAE successfully reclaims its economic sovereignty and reaps the profits of independent production, it sets a precedent. Other cartel members will see a tested blueprint for their own defection.
Yeah.
The UAE's exit threatens the 60-year architecture of control. As OPEC loses the ability to coordinate spare capacity, the global market reverts to a state of volatile sovereign independence.
Take a quick look and see what Bitcoin is doing. No breakout. I think it's doing good without our attention right now. Let's give Bobby a swing at it.
Welcome to this
Give me a second. We'll go through this slide deck and then we'll go piece by piece through the slide deck if there's any questions.
intelligence briefing. Today we are analyzing the current global macro storm and the increasing threat of market liquidations. We will examine the forces at play that are currently shaping our financial landscape. We have entered an inverted economic cycle where strong economic data, ironically, triggers market fear. As jobs reports beat expectations and inflation remains a concern, markets are pricing in defensive central bank rate hikes, leading to forced liquidations in global risk assets. A core vulnerability is that central banks lack the necessary tools to combat supply-side inflation. While the Federal Reserve manages interest rates, they cannot directly address supply constraints caused by global events, such as conflicts in the Middle East affecting oil markets. Global monetary policy is currently in a state of gridlock. Major central banks are taking divergent paths, from Europe's rate hikes to the Fed's pause. Meanwhile, the Bank of Japan's recent move to stabilize the yen has introduced a high risk of global contagion. The Bank of Japan's rate hike serves as a tripwire for the yen carry trade. When Japan raises rates, the cost of borrowing yen increases, forcing capital to be withdrawn from global tech and risk assets, triggering a domino effect of liquidation. This creates systemic contagion. As borrowing costs for the yen spike, over-leveraged institutions face massive margin calls. To cover these debts, they are forced to mass liquidate U.S. risk assets, directly driving significant market slides. Domestically, we see friction between political mandates and central bank independence. There is immense pressure to keep interest rates low to support economic growth, even as officials must navigate the reality of persistent, sticky inflation data. We are also observing a valuation anomaly in the tech sector, highlighted by massive IPOs like SpaceX. Historically, such extreme mega-cap valuations occurring during a time of global liquidity tightening signal a potential macro top for the sector. The wild card in this scenario is sovereign AI intervention. By investing directly into the AI industry, governments may be creating an artificial institutional floor, effectively removing traditional risk metrics and encouraging continued buying despite macro headwinds. In conclusion, the market is not experiencing a standard correction. It is repricing the conflict between forced global liquidations and unprecedented sovereign safety nets. We are witnessing a systemic collision of these macro vectors.
TLDR, it's not a bad time to be on the sidewalk. Question. Those Bobby videos specifically, you think those would make good shorts, standalone shorts? I'm thinking about just releasing all the deep dives either as shorts or just short videos. I figure it might be a cool funnel. Like that type of visual, I think is cool. I think it translates good to shorts.
Yeah, because you don't have to do any more production, right? You just cut it up.
Yeah.
But keep in mind, they are hammering down on AI-generated content, and it doesn't matter how much work you put into it.
Well, they're hammering down on AI-generated content, but from the talks that I've seen with the YouTube guys and everything, what they mean is like if your AI is giving you the idea, writing the script, where you're basically just telling your AI, hey, give me the most watched video of today, clone the video, put the, you know what I mean? Or you've got like Claude automatically just creating brand new videos. It decides what to write. It decides. That's different than someone that's using it as a tool to present their content, right? Their unique ideas or their unique. I'm just saying that's coming from them, you know?
I know, but I don't trust them to have a sophisticated enough system to understand the difference between the two.
Well, I think the difference would be that it wouldn't be on a standalone AI channel. Like if I was to start a channel called Bobby's World and just flood it with all the Bobby you get what I'm saying? But it being part of a channel where there's live streams 24 hours a day, you know, and it's just educational content that's created by me, you know. I
Have
mean,
you ever thought
listen,
about
trust me, some of these deep dives, and I'm not saying that I'm right on everything. I'm going to be wrong on a lot of shit. But some of these takes are hot takes, bro. These aren't Googleable takes. There's not a lot of people talking about, you know, I try to be ahead of things. And because of that, you know, you run the risk of being wrong, obviously. But also it stands out because you're just not recycling the same shit that everybody else is saying. Like there's a unique view there, right? Like,
can I ask why you didn't clone your voice, dude? You got a good voice, man. Why
I
didn't you
did
just
it.
use your own
That's the
voice?
problem. It's just not. Maybe I'm too much of a perfectionist, but I sat there on 11 Labs for an hour and a half was the session. My first session was half an hour. Reading the voice sounded like shit, and it's me. It's not. It's not that it's messed up. It's that I have to focus on keeping the same tone, and it just sounds weird, bro. It really does. And I think something because of the bass of my voice, the differences, the subtle tones, like the subtle tone changes aren't subtle at all. Like it'll go
Well,
from
I
me
would.
talking like this to then a moment where I'm talking like this. Nah, it's trippy, bro. It's the trippiest thing ever. And then on top of it is already that uncanny valley of you're hearing yourself say things that you've never
Yeah,
said. But I'm
yeah.
trying to get it right. I would if I could get it right, and it sound not like I want to trick anybody. I would be like, "This is Dbloc's AI. We're gonna recover. We're gonna go over his report today or whatever." But I need it to sound decent where you can listen to it.
So
At least the
you have a 30.
pacing and the stuff that they're doing here is decent enough to not get in the way of the content.
So you have a 3090 GPU, right? Is
Hmm.
what, or did you upgrade? Okay, so like, dude, try please just when you have some time. I know you're really busy. Try Quinn 3 TTS, man. It's open source. You can run it on your graphics card, and I personally believe it's better than 11 Labs.
Okay. Yeah, I'll give it a shot.
And the reason why I say better, I don't mean necessarily quality, but your input duration can be shorter and it's not censored as long as you don't talk about Tiananmen Square and you're good.
That's another thing that I like about the content. It's covering what could be considered some touchy subjects depending on the crowd. In a way that's opinionated sometimes because my deep dives I do try to put my opinion in it, right? I will give you both sides, but I mean, what's the point if I'm not telling you what I think? But hold on, what is that? Give me a second. Just got it. This is gonna be a scam, I'm sure. Okay. Scam email. Nothing to freak out about. But what I was saying was I think the Bobby character is sort of it nullifies a lot of that. You know what I mean? Like it's like not non-offensive because I don't care about being. I mean, if it's the truth, I'm gonna say it, right? If it offends people, I'll try to say it in a way that's not offensive. But that's not like my guiding light to be non-offensive. But yeah, it's like it's. I think it's approachable. It makes like difficult subjects approachable. Yeah, yeah. If I'm gonna post it, I'm definitely gonna get rid of the notebook LM watermarks, and I'm gonna fix all that. I already have an engine set up for it on Claude. I just gotta run it. Yo, 4 o'clock in the morning, I set up a YouTube video archive engine with Claude. I don't pull all the transcripts from all 12,000 videos, 1,200 videos, however many there are. And I think it's like 1,200, 1,300 videos. categorize them, make them searchable by syntax. It's amazing, bro. Then I had it go in and find the value. Right? I didn't give it a lot of prompting. I just said go in. I'm sure that, you know, when he downloaded, he's like, this is a treasure trove of content. Like, it's already done. You don't have to do anything. You just gotta use it, right? You just gotta like chop it up and use it. But I'll show you what he was saying. So I had him go in and I didn't give him any guardrails. I was just like, go find ideas for things. And he went in there and found every call out. Every call out, if it hit, when it hit, every macro call out, every like geopolitical sort of thing we talked about beforehand, da da da. You know how like I always joke and I'm always like, you know, if I really wanted to get to the bag, I'd just go in and say, oh, you look, drew an arrow, fast forward some Benny Hill music, and then boom, arrow hit, end of the short, join the cipher. It's like, I could literally do it now. You want me to do it now? I'll do it now. Like, yo. But I think
that's why there's a plan mode, because of that.
I think the real value is honestly having a searchable database. So like when I'm here and I'm talking about things and I'm trying to like talk about a concept or a certain part, like if we get to the halving, right? I could go into my database and put in halving, right? And then get a small summary and a timestamp for every time in the past 2 years that I've said the word halving or that we covered the halving, or like, that's crazy.
That's so funny because like you want to do that to make your system more durable versus my evil ass would do that to get the trolls to shut the F up in chat.
I mean, that would make it easier to do that. I might just give one of the mods access and just make it their 24-hour job to shut people up in chat whenever they say something stupid with a
Dude, it's
timestamp.
exhausting looking for that stuff. You're like, it's not even worth it. I'm not even gonna go look it up. But if an agent does it, then you're like, bam, right there.
I'm gonna do something. What I want to do is, excuse me. I'm gonna start with the major events, right? The days leading up to the top of the bull market, 10-10, the day after 10-10, right? And then pull things from there, and then we'll call it something like Cypher flashbacks or something, right? Or on this date, you know, and then there'll be the date, and then so it'll just exist as an archive where we'll be able to go back and look at shit without having to go through a 12-hour stream to find, you know, the hour and a half long conversation that was worth. Was kind of cool though. I don't know if y'all feel this. I was thinking about the other day. This is kind of like there's like a you gotta be there aspect to it, right? Like, because none of these videos are out yet, and they will be later, but it's like if you weren't here for that deep dive, then you weren't here. And I'm posting them, right? I'm still gonna post them in chat, but there's like, yeah, that is what I learned that through Cypher School. Just putting everything together for Cypher School. Like, I've said all of this. Like, I've said all of this before, right? And it just feels like I'm repackaging what I've already said. And then I realized, like, yeah, you said it all before, but you were the only person that was here for every single time you said it, right? Like, people caught 10% of it, 15% of it. They're trying to put it together. So, as much as I find the ick in playing some of these YouTube games, like not YouTube, but like, you know, the whole influencer shit.
Well, that and just it's in general, like you don't even need to do it like chat. You just can go into like Reddit, what is it? Wall Street, what is it called? Street Bets or something, that famous Reddit, and then just
Yeah.
just people just coming in to just FUD, or it's just it's a common thing. And like you said, it's people projecting their failures on others, right?
AI, after it looked at everything and I told it come up with a plan, it was like, I got it. 15-minute short or 15-second to a minute and a half shorts. You drawing the measured move, fast forward, price fast forwards, music in the background, thing hit, confetti, and then a running count on calls, and then we spam all social medias. And I'm like, bro, that sounds like a nightmare, bro. That is the opposite of what I want. You know the type of crowd that'll bring in? That's not what I want. Like there's gonna be a way to use the content, but it's not gonna be like that. Because what we're gonna get is 10,000 people in the chat that are like, what's the next call?
Yeah, you're gonna be what is it? Oh man, what's that? Well, what is this? Now, what am I spacing out right now? That one freaking show that was really popular post COVID during the last cycle, where the chat's going so crazy you can't even read it.
Streamer?
Those guys from they were in a South America or South Africa where they were based. Starts with a B. God, dude, I'm sound retarded right now. And Sheridan was one of their chartists.
Oh, you're talking crypto show?
Yeah,
Crypto banter.
yeah. But I'm just crypto banter. That you'll attract those dudes.
Yeah. No, that's
Sorry,
not.
that was a really long roundabout, but that's what I was envisioning when you were saying about attracting the wrong crowd.
That's not. Yeah, that's definitely not what I want. When we hit a target and I say target hit, it's not like, oh shit, look at how amazing I am. It's like, no, the concept's like, it's just a proof of concept. Right? What we're teaching in Cypher School and what we talk about on a daily, right? The live stream is a running proof of concept. If that was the case, I would have made Cypher School crazy complex, right? So you'd have been more confused than you were when you got in, and you'd have been like, bro, this dude's a genius. That's why he understands it. I'm never going to understand it. So I'm just going to like secure forever. But this shit is 1000% teachable. The psychology part's the hard part. This I promise you, this is the easy part. The psychology part's the hard part.
I mean, some people might interpret it, the more they learn, the more they do want to be on the sidewalk. And maybe that's a good thing, you stay out of it and just keep yourself out of harm's way for a bit until things settle down.
In the most literal sense, the most successful strategies have the least amount of entries. When you're back testing a strategy on a screener, you might start and it's like, 40% positive or something, and you got 500 entries and exits. You took 500 trades. And then as you go refining it, it'll be like, 52% positive, but you only took 250 trades. Then you get those guys. I have 100% guarantee positive. Yeah, you took one trade in the past 7 years. Good. There's a balance, right? You gotta find a decent balance. You gotta find is a quantitative edge, right? A quantifiable edge that if you just run that system, that you can expect that sort of performance and that sort of drawdown. But it's a system, right? It's just like anything else. Thinking in bets. I think we're gonna make that part of the next. Cypher School class, because that's what that book is really good for. The 1350 strategy, with all of the filters that we use, right? Volume, move into liquidity, or move into market maker magnets, aggressive buys on the tape, uptrending global liquidity, right? Once all those filters on paper, and I've run this with 3 different of the LLMs already. On paper, it sits between 64 and 71%. When all filters hit. I can't wait till Fable turns back on. I've been itching to I've been itching to use Fable to look at some of the indicators, like before I
Well, if
launch.
it makes you feel any better, dude, they turn it off internally too. So I don't
Nah,
have access
everybody,
to it anymore
bro.
either.
The dev is a foreign national. He's not gonna have access to it when it turns back on. And he's a dev. Can you imagine? You lose
Yeah,
access to your premier model. Like, have you
I
seen
know,
all of
man.
these?
But
I'm putting together AI class, by the way, Wednesday. I think we'll do it on Wednesday. I'm trying to work on something that I want to have ready for it. Maybe if I can get it done by tomorrow, we'll do it tomorrow. But there's a prompt that I'm working on. Well, it's like a mix of a couple different ones, but there's some stuff I don't like that I have to fix that I'm taking out. Where it basically gives you the procedural thoughts of Fable, right? Of how Fable actually operates. It doesn't give you the computation, right? But Anthropic released some of the documentation that they released on Fable. If you dig through all that boring shit, or better yet, have Claude do it. There's a couple of lines.
which is
There's like
ironic.
there's like 7 or 8 lines, right, that basically teach it how to think from the get go. It's like some of the shit that you put in your MD files just to get your thing to act right, right? But the way that it works is interesting. The problem is there's some things you have to remove because if you give it that instruction without the compute or without the ability that Fable has, then it just makes everything up, bro. I was watching a video that shit did an entire project for a guy. Entire project, found 3 errors, fixed them, published the project, pushed it, and it was all fake. Like he hallucinated the whole thing, didn't create anything, but on the screen just went through the motions. So there's definitely some shit that you need to, if you're gonna put those instructions into something that doesn't have the capabilities of Mythos or Fable, then you have to remove some of the, I think it was the persistent learning and the autonomous, some of the autonomous things were glitching out. But a lot of the other stuff is good. There's some really good stuff in there on token conservation. There's some good stuff in there on memory. I don't know. It's just little upgrades.
The rumor is at work it was actually an NSA guy that found the exploit.
I believe it.
Those guys are scary, man.
I really don't like, and I know I said it before, and I'll stop talking about it, but I really don't like the whole nationalizing of an entire model like that. Like that's such a slippery slope, bro. And I understand the argument. I also understand that the argument's complete bullshit. Even though the argument's true, it's not the real reason. The real reason is we needed leg up, and we're gonna take this leg up.
Well, that too, man, and they're really paranoid because what the Chinese models do is
Immediately on day one, instantly.
they pick at our models
Yeah.
because their reasoning models are smart enough from their previous picking.
Yeah.
It's just a derivative, and it just finds out how they work, and then they put out a model, and it makes NVIDIA drop
Yeah.
500 billion in market value in a day or something. And I think they're tired of it, or they're just tired of it.
But if you look at some of what they were saying on the reasoning for it from the government side, they were saying security, right? Being able to have, I don't remember what the buffer is, 90 days or something. There's a buffer. I mean, it's not going to be forever, but every new model that comes out is going to have basically a buffer attached to it where nobody else gets it but Americans for a certain amount of time. I can't remember don't quote me on the days or the months. I can't remember exactly what the timing is. But they were saying also for security purposes, right? They want the good guys to be able to create the defenses before the bad guys have a chance to, which is interesting because it just assumes that there's no American bad guys, right? Which is dumb, but
Well, extradition stuff, dude. Like if they got somebody in the United States that's doing something shady with it, they have a much easier. There's less friction to arrest that person. Somebody's doing it in the middle of Egypt. There's a bunch of BS you gotta, you know what I'm saying?
Bro, they said that foreign nationals won't be allowed to use the model even within the United States. I guess they're counting on Anthropic to keep that together, or you think Palantir is already plugged in? You Palantir is running the show already?
Dude, there's something that tells me that all of those guys have special backdoor deals with special models they're training on their own. They're kind of
Bro,
like, here, I got you 3/4 of the way there. You could do whatever you want with this custom model.
listen, I've been trying to attach an AI agent to every project that I have. Like, there's no way in hell that Palantir doesn't want the brains behind the whole operation to be, the biggest, scariest of them all.
Well, this is why I was telling, my son's like deciding, do I do mechanical engineering? He's already ruled out computer science because he's scared. He sees what I go through at work and blah, blah, blah. But there's no doubt that cybersecurity is going to be an awesome job.
Oh, yeah.
You know what I'm saying? It's just crazy.
Job.
'Cause even if you have bots that are fighting bots, you still need humans in there writing scripts, man.
Hardcore job security for sure.
And just being the FBI SWAT team might be a good job to get into. With crypto going through changes, when quantum computing comes online at a massive scale, you got the models doing old school legacy hacks, 2FA hacks, writing emails from Bank of America that look legit and it's fooling elderly people. Dude, that stuff's just gonna exponentially escalate.
It's not a rejection off of anything serious, Scott. Right, but we haven't retested the 50. We haven't had our type 4 entries. And you know that W usually fractals before the first one plays out. Right, like typically how you'll see it run is you'll get that W in that measured move. And then as it breaks out, it won't get the complete measured move. It'll come back and get the type 4. But that type 4 creates your fractal for your larger W. Now, if it doesn't hold, right? If it breaks the 50, then yeah. And they front ran this shit and robbed everybody. So far, I like it though. Remember, what we want are as many groups of traders to be involved in the trade at once, right? Because we need their money. Listen, you snipe that one, you're done. You want somebody else to buy the bag, right? Even if you added it to, let's say you're fully in, you're not adding to that. You're hoping that breakout traders jump in, and you're hoping that type 4 traders jump in and buy so that it keeps going, right? You need them. That's why I say that market maker will come back to pick up traders. They try to go up, can't go up. There's too much money to get up there, right? Market maker gives you the vectors and then steps off of the gas to test retail sentiment. Retail doesn't have what it takes to go up, so market maker stops matching orders to the top side. Price naturally comes back and reverts. You get to pick up these traders that weren't in the trade before, and then they'll try it again.
Dbloc, do you ever run into that problem where there's been so much shilling and scamming that's happened in the crypto market, especially on YouTube and like in different communities where people come in that you don't know who they are and they just come in and then but then you have legitimate people that have been with you for a while and they want to recommend something but they don't because they don't want to be put in that category of someone who's shilling a product?
I mean, yeah, it happens, but unfortunately, in communities, there's only really one way to keep it safe, and that's that. You know,
Just don't do it.
yeah, just don't do it. Basically, unless directly asked or asked privately, or that just comes from experience, though, bro. That just comes from so many people. The amount of people that I found out after the fact that actually had something to do with the project that they were talking about constantly, whether it was an indicator or whether it was a channel that they brought up every single day that they came in, or you know what I mean?
Yeah, it's just like even when you just, for example, why I get a lot of crap because I mentioned the word Coinbase and